Wednesday, October 26th. Turn off that music so we can focus. I'll leave it out in the background. Hopefully it's not too loud. So we've got an interesting day today, a continuation day. But the interesting part about... So yesterday we had a trend day up. Yeah, I think that might be too loud here. We had a trend day up yesterday. And then closing at the highs, which is usually what happens. Then Google came out and with some an earnings miss. Or I don't even know it was a miss, but just not up to expectations. And they dumped it all the way through. Well, for NQ, it went back in like through the entire range of the day and back into the previous overnight session, in the range of the overnight session. But you can see that in London, they refused to let it die. Bought it up, closed the gap. I did a stream where we caught, or no, I guess we missed most of it. I got a piece of it earlier, but I didn't catch the gap fill. It set up, I just didn't take it. And then, yeah, I went to sleep and they like basically just distributed here. And what's really interesting on NQ is they tested just below the Globex low. See that? Just tiny bit below. And then found buyers at the regular trading hours open. So what that means when you test below a low like that, just by a couple ticks, and then get a huge response, especially if you look back here, see how that's like so exactly aligned. So it's short-term traders just like having their way with a range is what's happening. The big traders are, the big money traders are absent in this range is what that means. And so the smaller traders can, like a short-term trader can take advantage just by pushing the market with a little bit of size and get it to recover some of these. Another way to think about it, they tried to sell it, and when they got down to where after they hit all the stop losses of everybody who got long, there were no more sellers. So that's why it happens. Oh, hey, FA. Cool. I'm glad you are learning the volume profile. That's fantastic. So yeah, the trap down here set up really well, but it was in the open, and so I did not personally take it. I don't generally trade the open, like at least the first 10 to 15 minutes. We are now back into yesterday's regular trading hours POC after recovering the gap and the entire session basically yesterday. We didn't quite make it to here. I'll show you again. We didn't quite make it to the close was up here above the voodoo range level, 11.7, 11.75 maybe. And it didn't make it there before lunch. It doesn't mean it won't. It's just it oftentimes during trend days it'll cool off during lunch and then turn around again. We ripped right through this 2 standard deviation VWAP line. And you can see last time we did that, on the way back up, it became resistance. So we'll have to just see. I don't know if they're going to get down there, but that might be something to watch. But then what I do when we have these consolidation periods at the top or at the bottom of a range, you can draw the volume profile and identify the value area, because that whole area is going to be really easy to trade through once you've gotten into it. So see between the blue lines, right here, this is going to be a fluid area. See that? And so that is a very normal place to be looking for longs underneath, shorts above, and then trade through if you think it's going to balance. And there's good reason to think it would balance during lunch. And when I say balance, I mean like in this case, since it's trend day up, balance would be going down until they find buyers and then going up until they find sellers. So as we enter the POC, I generally don't take trades at the POC. You can see that it tends to create some like additional rotations, and it's not a good place to fight the trend generally. It can be a good place to jump on the trend if you had a gap up and then a pullback into it. It would be a good time to buy it. Or if you have a gap down and you pull up into it like this and then it rejected, it would be a good place to short. But in this case, we've gotten above it, so it's a little, I don't know. I'm skeptical whether or not a short would work here. Just looking at momentum, it's hard to imagine that we would get under the POC and suddenly I mean, we'd have to trap all of these guys. I guess it's possible. It could happen. It could happen. Because if you think about it, we did gap down. We came all the way back up to the POC. If then we pushed up and all of these guys get trapped, technically what we would need to do then is to get under the POC and reject it. That's probably the only way I would short. What I'd like to see is if they can hold it, that's actually pretty strong. Otherwise, if they want to test below it, we can look, hi Cat, we can look at the measurements. Let's see which one to use. We'll use, it doesn't really matter. That's all the way down. So if we go as far as from back just after the open, that pullback, if we use that, the 38.2 retrace in a trend day is generally the first opportunity to catch a pullback after, to catch a bounce. And so that it has not made it there yet. It's close, but it hasn't made it there yet. So I'd like it to get at least to like 11.628 before I like commit to jumping back on the trend, because it's just not a big enough retracement. It doesn't mean it can't go higher, but I can't confidently start looking for longs until we either trap shorts or we get underneath that level. So if they would put like an orange bar like this way down at the bottom, or a yellow star like this way down at the bottom, then we can start looking for longs. But until that happens, or until we get at least a 38.2 retracement, preferably more, we're going to assume that they're just kind of in a holding pattern here, and they're going to try to hold the market. They're going to try to develop volume above this POC. Buyers are going to try to develop volume above this POC, because doing so traps the shorts and forces the shorts who got short back here, right, all the way, all these guys, it forces them to exit. So everybody who got short overnight, once they see that the market tried to pull back, yet it's hanging out and it's not going down, those shorts become the new buyers, and then new longs get antsy and chase it. So that's how you get those continuations after lunch, is usually you get a pullback that can't develop volume below support and instead starts to wiggle around above support, and so, or old resistance, right? Old resistance, new support would be the idea. But like I said, I'm not going to participate until in the long, at least until they get down below 30. By the way, I'm doing okay today, up 206. I missed a really good long early that a couple people in the room got, and that one would have been killer. And what's sad is I missed it because I was like just distracted on Twitter, which is frustrating. It's just like, come on, if you're gonna trade, you should be looking at your chart. And yeah, Matt in the room called out the long, and I'm like, wait, what? And I can't just click a button because someone says it's a long. I gotta go see it. And by the time I had looked at it, it was cooking pretty good. So I was like, okay, well, at least I'm not short. But man, I should have caught that. So when you get these little flags, and then we pull under them and then come back immediately within one bar, that is known as an apex trap in the room, and that's a pretty reliable scalp. When they stop working, it's it's really important to be aware that that means that there's probably momentum in the other side of the market, or there's no order flow. So, for instance, like the market's not moving enough to get you paid. But assuming the market's moving, and it's not like Globex or sometimes in lunch where it's just like stuck in like a 15-point range. If the market's moving and those trap trades aren't working, chances are you are fighting momentum and you want to switch sides as quickly as possible. So let me see if I can find one on the short side, for example. Here, right here. So made a high, made a higher high, immediately closed bearish, and you can't even get 10 points. That is a clear sign that you are fighting momentum. And it stops out more on the short side than the long side, but you don't want to be when that happens. You don't want to just keep taking them over and over again. You need to look for a reversal, not because that is a balance trade method. It's mean reversion, so it's something you'd use. It's something you'd use during balance or negotiation phases, or just trade it only in the direction of the trend. So, in other words, if it's bullish, then this entry should produce an extension. In other words, it shouldn't take out this low. But the problem is I want it to take out that low because I'm not low enough to buy yet. So it's tricky because in this case, if they get down to my 38.2 retracement point where I'm willing to start looking for longs, by getting down there, they would have to stop out this bar after that trap trade. And if they stop out that bar, it means longs aren't currently working. So you have sometimes within your process, you may have conflicting information. And generally, the rule when you have conflicting information is number one. Oh, there's probably more than one rule, but number one, the most recent information is the most pertinent information, and then number two, the going up in time for if you're trying to figure out direction, going up one time frame. So, for instance, from the 24 tick to the 32 tick, will sometimes give you hints to whether or not you're trading the right direction and whether or not there's even a trade at all. So like on the 32 tick currently, you can see that after getting above the blue, which is the PSC from yesterday, we made our way up. They scorched that last short, and then the shorts tried again after making a higher high, and this one there just weren't anyone, there wasn't anyone sitting here supporting it. We had a hint about that because of this pink diamond, which suggests that there's a volume anomaly up there. Those should exist at support. If it's bullish, like down here, it makes sense. But up at the top, the star and the diamond together suggests that the buyers are working really hard to aggressively push here. And they really shouldn't have to work very hard, especially after a purple bar, which suggests that buyers were just pulling orders, and that's why the price was dropping. So bulls pull orders, suddenly bulls aggressively attack, and then bears reinforce, right? So that sequence is bearish. The star, diamond, up triangle followed by orange at the highs is a bearish sequence. The opposite of that would be pink bar, star, diamond, triangle followed by green up, right? So had this reversed higher, that would be a pretty bullish move because it suggests that bears are pushing really hard into the low and not getting anywhere. Instead, what happened is bears pushed really hard into the low and they got an extension. Bulls tried to save it and were rejected without taking out this high. So that would be bearish. So by looking at this chart, the higher time frame chart, if I wasn't sure whether or not I want to take a long here, that would be a good reason to say, hey, you might want to back off on longs because shorts are actually winning the battle over this area at the moment. So until a seller gets trapped, we really don't want to be getting long. Now this is a new signal. I'm using the blue is a sign of absorption. It's not an immediate trade, like here it is over here too. It's not an immediate trade, but what it means, what you can do, I'll show you this one since it already occurred, is there's a tiny little blue dash wherever the absorption is, and so we're gonna put a line there. And then the idea is if you can get in the future that level there to be support or resistance, especially after breaking underneath it, coming back up and resisting it. So getting blue arrow up followed by orange bar, or blue arrow up followed by down star, the yellow stars, possibly even blue arrow up followed by yellow arrow across. I don't know, but that one might work too. But that is a sign that they absorbed sellers here, then sellers made it through, and when they came back up, those absorbed, those buyers who tried to take that position are now sellers. So that was the momentum shift right here, which would have been another reason not to take this trap trade. I know that's a lot of information, but the idea is just it's not necessarily an immediate trade when you see the signal, but I identify the location as important for determining who's in charge, who's running the show at the moment. And so that blue arrow here, you don't know who's in charge, but once they give it up and then reject it, now in this case it took 2 tries, but you got the signal here that this becomes a good short. And so all you need to know, you don't need to know all of that, all you need to know is how to do it, right? Find a blue arrow, draw a line at the dash, look for an orange bar or a star going the other direction that shares that level, and short it, right? Once you get good at that sequence, at identifying that sequence, you don't need to worry about what it means. You just need to remember the sequence. And yeah, that's something people get hung up on, like what do the signals mean and how do I know that's buried? It's like it doesn't matter. Like I can teach you if it really does matter, but it's just going to fill your brain with unnecessary information. I can explain what's happening and analyze because I know what the signals mean. But even if you don't, you just wait for the signal, the series of signals to show up. Now I did take this. Where was it? I took this one and covered into this low. I did not re-short here, and I probably should have. So that was a missed opportunity. We're just going to get rid of that 38.2 line because clearly they're not going to set it up. And after doing that analysis, I don't want to be long. But you can see how the POC, the blue, resulted in traders trying to defend it. And that's why they got that aggressive signal. That star is a sign of aggression down there. And so they pop it up off the POC, but they don't have any momentum to get over this moving average of the point of control line. So this yellow line is the point of control for every bar. And just watching where volume can develop from bar to bar and which direction they take it, they take price after. So for instance, when they push volume up, every time they push volume up, it results in a down bar. And that down bar's high can't get taken back. See that? Down bar's high, can't get taken back. That's bearish. That's momentum to the downside. You'll see the exact opposite, where the yellow line will be unable to get underneath lows, and every time it tries to go down, it ends up, the price trades higher. So that yellow line is really important to watch. And you can actually be pretty precise about like how far it is, and you can use it. I use it to build some of these signals. but I've also added some moving averages of that yellow line so that I can see what normal is for that yellow line in the over a number of different time frames. So, for instance, the pink one here is over the last 10 bars where the yellow line has been on average, and then the orange one, for instance, is 49. So where it's been over the last 49 bars on average, and you can see that they react, maybe not exactly, but pretty close. And then you might not want to take a trade just because the yellow line got above the pink line, right? I don't use it like as a moving average cross strategy or anything, but I do pay attention when that happens because whatever happens next. So, for instance, if buyers get this yellow line above the orange or above the pink, so yellow crossing pink, this is an aggressive move by buyers, and so seeing how they respond to that, and in this case, they try to defend it when they get the pullback, they have to put in a volume anomaly, and it's followed by a short signal. So if you knew you were bearish and you saw where you rejected, which is off of a POC, and you see the POC MA, and you see that the POC line tried to get aggressive and then went lower, tried to push and was closed lower, like you can scalp your, even though it might not be a, like even if there wasn't an indicator here, you could probably scalp your way down, just reading that line and looking at momentum. That's not necessarily on process for me, but it's definitely something I do and have done in the past. And like I said, it for small, short-term, little scalps, that technique works pretty well. You just have to stay without using. If you're not going to rely on visual signals, oh, that's interesting. That's a long. But again, we're not. We are now back into the area where longs would be a good idea, but I don't have any buying momentum, and we're still 15 minutes from the end of the lunch hour, so I don't necessarily have strong confidence that they're going to reject lower on a single attempt, but that green bar with the diamond indicates that there was a lot of volume down here, most likely, because I know that because I don't see any I don't see any delta, so the only other volume anomaly it could really be is higher volume towards the lows. And so if we can develop volume up here and then see buyers defend this level, it could be the low. If they can't defend the level, buyers have basically given up. So that's the other important part about seeing diamonds at the apex like this is, as you can see, if they're at the apex and momentum is with that direction, it should result in immediate impulse moves. So when they take it out immediately, it's something's, you don't want to be long. I'm not a breakout trader, but if I had to take a breakout trade, it would be after something like that. I don't love that it's purple bars here because that suggests that buyers are pulling their orders, but if I was a breakout trader, I don't want to see buyers pull their orders. I want to see sellers aggressively follow through. So here they might pull this back in. Maybe they're just going to trap them. That'd be interesting. Let's double check on the higher time frame to see where the interaction is. Yeah, so we're getting pretty close. I see. It was right off the single prints. Okay. So they bounced off the single prints with the volume anomaly, ripped higher, went through POC with a pullback, then tried to save it, rejected out of yesterday's POC. Now we're going back to this support and the single print. So that makes perfect sense. What doesn't make sense to me is when they try to front run it like this, it is usually going to fail. This is why actually drawing them on your chart that you're trading and not just referring, like a lot of times I've made this mistake. I've talked about this before. I have so many charts that like I will draw things here and then not draw them on here, and the result is you like visually see that you're getting close, but then you look back and you're actually not quite there yet. And I've taken stops simply because I like misread where we were on the chart, just because I have too many freaking screens and charts open. So it's important that if you want to use a level for trade decisions, it needs to be on your execution chart, in my opinion. if you're going to use levels for directional momentum analysis, stuff like that, like just like not necessarily trade decisions, but anything else, then it doesn't need to be on this chart. But the any level that you're planning on executing off of, it better be here, because and I'm saying that to myself because I've made way too many mistakes thinking it looks like we're close enough, and then you actually put it on the chart and it's like, oh man, we rejected immediately as soon as we touched that. I just didn't have it on the chart, so I didn't notice. That's just lazy is what that is. Definitely kind of wishing I would have held those runners, although to be honest, I don't think I would have been able to hold through this. This was a totally valid short that I just kind of I was so focused on wondering whether or not it was a long or not, I wasn't even thinking about the fact that we might get short continuation. So I just flaked on that one. That was definitely on process. I've been so conditioned to focus on the long side because it just works better. In other words, like the probability when it sets up long, the probability that it's going to produce like a 15 plus point move is significantly higher than when it's short. The thing is that the short setups, when they work fast, and you can get 100 points without having to hold through a lot of pullbacks. So the shorts have a lot of it results in a lot of dopamine releases because you feel like you nailed the trade and it immediately pays you and everything works out beautifully and you're a magician, right? Like those kind of experiences build that response in your brain that whenever you see that short setup, you don't want to miss out on this big drop, right? And so the result is you end up taking shorts more aggressively than is really called for, because there's a lot of if you think about it this way, this short was pretty good. But if you tried to take this short, I mean, it looks great, right? But how do you know that it's this one and not this one and not this one and not this one? In my opinion, the only way you catch this is by taking at least one of these and just aggressively trying to attack it. I don't know how else to get it, unless it sets up in a different way. But in this situation, it did not set up in any other way, as far as I could tell. Not the setups I trade. So I would have no way to catch that unless I would have gotten lucky and not shorted any other ones. Which, like I said, I'm just aggressive or not. It's not like I'm aggressive only after seeing the third attempt or something. It's an interesting idea. It's just not something I do. All right, so we got into the single prints. Wait, is this single prints? Yes, it's a small piece of single prints. So there's a missing line on this chart. We were just talking about this. Fuck, and now it's going to happen. What's the high of this? 93 should be marked. So 93 is, locked. And it's an anomaly. So that is, you can show it on the candlestick chart. It's this. So there's single prints from here to here. There's a little piece of single prints, and then they retraced and topped out right there and then rejected. So this space between this one and this one, I believe some people call it a fair value gap. I don't care what you call it. It's important. And it's usually going to be retraced. They're going to fill it in there. The difference between support and resistance on the way back up is an important level that usually gets broken. It can act as support on the way back, but not usually. In my experience, it's just that it gets filled. So once you get down here, the market wants to come up here and get rid of that, and then it can continue on doing whatever it was doing before. But then there are also single prints all the way from 59.25 down to where they started to overlap right here, 11.25. So there's single prints here, and then there's single prints here, but there's this this anomaly in the middle where they pulled back up, and it's like just this time where one like over 1 hour they traded back through it, and then the crazy thing is they gapped down. So that's why this level becomes kind of unusual. We don't usually see those kind of big gaps in futures. So yeah, when you see a gap, you pay attention. But I don't, like I said, I don't usually see these result in support on the way back. But I also have not seen a lot of them that show up right before a gap. So it's possible that in addition to the gap, see the gap low did produce support. See that? This was the gap low. And then this is Dalton's gap fill. But on the way down, this is where they found support before they closed. And then they gapped down. So that level, that 59.25, was resistance and support this morning. Makes sense. But the Dalton gap fill, the furthest it went before the gap, the low before the gap, is here, which also was resistance, but we haven't seen it act as support yet. So that is 40. So we're going to put that in the chart too. Oops. Hold on. Let me make sure I have this exactly right. The low, 39.75. That's what I thought. Okay, and that is a gap. Dalton's gap fill. So it's already been filled, but that previous low before the gap, people may be planning on making decisions there. Man, I definitely am feeling a little bit disappointed that I didn't take this one. Like I said, you could have taken, where was it? This or that. When these speed bars get broken, momentum's increasing, so like you could scalp quickly, like get like 5 points, but I'm up on the day, so like I don't really feel the need to be like ultra uber aggressive. But if you feel bearish, that's how you do it. Okay, they're you can see they're absorbing some sellers there, so we're going to mark that level because we might be able to come back. It's right on the POC. We might be able to come back and produce support and resistance there. So we're continuing lower, headed right for that. Oh wow, look at this. So we're going to run into this big delta, and we just put in another one. Look at all that delta. So a bunch of people covering there. And again, this makes sense because we're at a key level. Whoops, I'm showing you the wrong one. We are at a key level here. That it's that gap low, or the low of that pullback before the gap is what's getting the reaction. That's 59.25. So right here. So I do not be surprised to get a little bounce here, and then if we can hold above this on a pullback, it could produce a bit of a bounce. But this is, see how speed increases as momentum increases. Look how far we are from the channels. That is a clear indication that you don't, in my opinion, that you don't want to be fighting this move, because shorts need speed and momentum to accelerate in order to get an extension. And so as soon as that starts to slow down, it's almost like an exponential effect. It needs to be growing not just linearly but exponentially to really continue. And once it starts to even just slow down a little bit, it won't be an immediate buy, but it may set up for a buy as a result of that. So let's keep an eye on it. We've got ES in the corner over here. I just kind of keep an eye on it because if it signals, I don't usually trade ES, but it's just a little bit slower. But if it signals, they have been a little bit divergent lately between the two, NQ and ES. We are bouncing off a voodoo range level on NQ. ES looks like this, by the way. We haven't quite gotten to the voodoo range level yet, but you can see that we, again, did not reach those targets, but it did clearly get over the highs. Back here, we got stuck in this resistance. See that? So it's a sensible place to turn around. On ES, we've already come through yesterday's open as well. Sorry, yesterday's close. So, and like I said, we saw speed and momentum, like force, aggression, whatever you want to call it, was increasing as we were dropping. So we're not real gung ho, in my opinion, about like buying a low here. If you want to try to take a long, it should be for a scalp, in my opinion. And then you can always, if they hold it, you can always add to your scalp, if it works out. But generally, it should be like a quick snipe back up into one of these levels. It's not. It's just not good psychologically to have a sense that you're going to catch the low. In my opinion, if I fantasize about catching the low, what ends up happening is I miss all the shorts. So if momentum is actually increasing, speed's increasing, and like everything's, the environment's right for bears to start showing up. So like of all the times, if you were going to be aggressive on the longs, you should have done it long ago, like maybe when we were going higher. So if there's no reason to get aggressive on the longs now, when the tables have turned, and especially when we trapped those buyers above POC. Like I said, I did mention it when it happened that could be the setup that they were working on. Unfortunately, we didn't get the retest that I wanted, and you can see what we got above POC. And what I wanted to happen was to come back up and set us up here, and it just rug pulled. So it was a slow rug pull, but it did not give me the highest odds setup, and shorts have just not been working today. So and like I said, I'm up on the day, and so it's when all those things are combined, it's I tend to miss trades. I also tend to start streams because it'll help me not take overly aggressive trades, and I can learn by teaching and not overtrade. So if we have a really good setup, I will definitely take it, but it's got to be a high odds setup. I'm not going to give away a decent green day, just because I might know which direction we go. Like I need it to actually set up. Okay, testing under that voodoo range level now with volume. You can see if we need to close. Oh wait, we did. We got that candle close with volume below it. So the volume line, the VPOC line, printed on a bear bar below the voodoo range. Too many V's. So that does suggest that bears are at least taking a stand down here. They could get trapped. They're setting up to make a pivot here. So bears are trying to establish dominance, is what that means. And it's taking a lot of pressure. They're trapping longs, trapping shorts. So right in this area. So whoever wins this little battle should get the next extension. Let's see who gets the yellow line outside of this area. So the yellow line is the VPOC. And we need to see, can it get above the red and print a green candle, or can it get below the green and print a bearish candle? It can't just be price. It's got to be the VPOC line closing, printing above the high. It's right on the voodoo range level. See that? The dash is where they interact. Yeah, it did not go above this. It missed it by a tick. And purple and pink bars don't count for this exercise because they are produced by buyers and sellers pulling orders off the order book, and so you end up getting like price moving without volume. So we need a white bar or a brown bar to print with the VPOC, the yellow VPOC line, either above this red or below this green. Otherwise, it's just going to chop in here, and I definitely do not want to trade tight chop. That's a recipe for disaster. Yeah, see they've got to turn, buyers have to turn this candle white, and they have to push the VPOC up just a little bit. Pink is not going to do it. And see how VPOC's not moving? That's because price is moving because people are pulling their orders. It's not moving because of someone aggressively stacking and attacking. It's just sellers giving up. There we go. Now it's white. Okay, so it can always change back. So it doesn't matter until it's closed. Nothing matters until it's closed. But you can see as soon as they actually got some, there we go. They've shifted the volume up. Okay. Now, what does price do in response? We've gotten the volume above the voodoo range level and above this red trap traders candle, and suddenly bears are back, right? Let's see if they can close it. If they do, it's probably going to go to the low again. If they close it higher, the low may be in, because that suggests that the sellers actually got trapped down here, which is what the green bars are. But you can see those green bars, if they get beaten immediately, like it's just a failed attempt to trap them. So they have to actually get an extension out of it to have it be at the potential low. You don't really know it's the low until you've moved away from the low, unfortunately. That's just the way this game works. But you can look at all this accumulated volume on that wave. I mean, that wave down was intense. So why would you fight that? Like, okay, cool. So we're extending beyond the channel quite a bit more than you'd expect. That makes sense. Let me just quick check the higher time frame, make sure there's nothing I'm missing here. Okay. Nothing important going on in the higher time frame. The 32 tick printed a speed bar down. That's bearish. You can see that they got volume above the voodoo range level, and then they immediately rejected it with aggression, which is what the yellow star is. So shorts are aggressively defending the voodoo range level. What does that mean when it's bearish? It means we're probably going to continue the trend down, most likely. So now the question is, where do you want to get short? And for me, it's I need a setup. So an example of a setup would be testing over this level and then dropping down. That would work. Otherwise, the yellow star all by itself in this scenario is not quite good enough. But if we got a green bar followed by an orange bar right after it, that would be a potential short. It'd be aggressive. So they did get the green bar. So volume, they're trying to shift volume up. But again, this is a pivot. The red followed by green immediately creates a pivot. And so shifting volume inside the pivot is not barely as important as getting volume out of the pivot. So see how it's pink? They're like sellers are playing. They're playing. What is that called? Like they're taunting buyers to push here. They're like, I'll pull my order. I'll pretend like we're gonna let you go, and then they come in aggressively, and it's like, boom, get them, right? So sellers are like playing with these bottom feeders right now. Now they might get trapped, right? They're like, that's the thing. If you're gonna taunt, you potentially could get caught, but that's what they're doing. They are baiting them to buy up here. And if you follow along, it clearly looks like bears are still in control of this market for the moment. I'm not sure if that was I guess I should check and see if that was news or if it was just technical. We saw the technical. The technical reason was there, but I don't know. There might have been a news alert too. Checking Twitter quick for news. I don't see anything new. And on the calendar, do we have like a... They're not allowed to do Fed speakers, but it could be like somebody else. Import prices, Australia is next, and that's not for a while. So, nope, no news. Okay. Whoops. Okay, so they got another yellow star here. So more, and yet once again, it occurred after volume tested above that voodoo range level. It's bearish, right? It's bearish. It's just a question now of, will they follow through and get out of this pivot, or is it just going to be sellers sit up here and buyers sit down here and they duke it out for half an hour? We don't know. So you don't really want to sell at the bottom, because then your stop goes right where you want to be selling, which is at the top. So instead, what you have to do is you have to wait for the setup, which would be a test up here that gets rejected, and that would be a pretty good sell. Otherwise, an orange bar or a star that interacts with this top channel would help. Yeah, you could have taken this one, but then, like I said, if your stop gets taken, you'd have to try it again if they drop it. So you have to kind of decide ahead of time, how many times am I willing to take the trade in this location? And for me, I really don't want to have to take it twice. So I will just wait, pretend like I took it, and then if it gets stopped out, I get one more try if they set it up again. That's how I think about it, is if I was being aggressive, I'd probably try it twice. And if I'm going to be passive, I will try the second one when it sets up. And then when it doesn't set up, you just miss it. Because if you take the first one, but you don't take the second one, that can be a big mistake. So the trick is to plan ahead for each location and decide, am I willing to take this setup more than once? And if the answer is no, that means that you might miss it if it only tries once. Because then you want to take it the second try. If you're willing to take it twice, then you can take the aggressive one right away, and then if that one gets stopped out, you can come right back and get in again. Just depends on how confident you are with your direction. And for the moment, like I said, bears had a pretty impulsive move with building momentum, but you can see that now we're stuck in this pivot. We're not really going anywhere. This is not, Matt. This is actually the 24-tick Renko. Good question. It's not a time chart at all. It is the 24-tick Renko. So the market needs to move 24 ticks up or down to print a new bar. And so the bars show the direction that the price has moved in this current range. So when it goes fast, you're going to see a lot of bars print. When it goes slow, you might not get any bars to print. It might just, like if it's only going in a 10-point range for half an hour, you get one bar. So it's actually unrelated to time, but you can watch the speed that they get printed to get a sense of how fast the market's going. Because the truth is all my setups are based on order flow and market structure. They're not based on getting a hourly candle to close below the low or whatever. It's none of them have anything to do with time span. It's all about order flow and, like I said, like where it is compared to the most previous pivot, for instance. I don't care if it happened an hour ago or 15 minutes ago. It's just the previous pivot. So for me, the Renko charts give me a lot more information that I actually care about and a lot less extraneous information. That's a short.
Order filled.
Hold on. So stop is going to go up to 56. I'm just going to give it a little bit of extra space. It may not work. We are shorting the bottom, right? Like we're shorting in the hole, but it's a valid signal, so I'm going to take it. If it gets stopped out, I probably do have to take it twice. But
Order canceled.
All right, so we've already gotten our 10 points. We're going to see if we can get another one. Oh, fuck, it's too close. Move. Okay, I almost took that profit way too fast. All right, so we're going to see if we can... I split this into two. So I took 10 points right away. That way, even if I get stopped out, it's basically just free runners from here. I don't have to worry about trailing my stop or anything. It's just how much can I get paid now. Matt, it has to do with the conditions. Oh, hold on. Let's see. No, I'm going to leave it. The conditions change, and then you want to... So we backtest the algo on a regular basis on different charts, and you have to decide how high of a win rate you need to be able to stay psychologically stress-free or low stress. If you go to 16, which is the fastest I can trade, if you go here, you're going to get a ton of setups, but you're going to get a ton more stops too. And So, but those stops are going to be small. But you can, a lot of times when the market's not going anywhere on the higher time frame, you can zoom in to the smaller time frame and identify setups there and entries and stuff. And then your stop will like generally be smaller because most of the stops are 1 bar stops, if the setup is a good setup. So, and then if it's moving really fast, like too fast for me to process here, I can move up to the 32 and trade this. The primary reason we use the 24 is because the risk on all of our setups is approximately 1 bar. And so having 24 ticks of risk, 24 to 48 ticks of risk is an amount that I can live with and I can size to make that work for my account. If I was willing to take a bigger loss on every trade, then I would have a higher win rate trading from a higher time frame chart. If I want to be really aggressive and I'm okay with taking lots of small stops and I'm not going to get flustered by that, the smaller time frames will give me a potentially bigger profits because I have more opportunities. But like what I said initially is really what it is though, is that we all backtest these different time frames and we figure out which one, if there's like a plateau effect, and generally the plateau effect has been happening around 20 ticks lately. So anything less than 20 ticks, the difference between 20 ticks and 16 ticks is small when it comes to win rate now. And so I want to go above 20 ticks as best I can, as long as I can control risk appropriately. And that way I can take advantage of like the optimal conditions. But that has changed over the summer. It was actually more profitable to trade the 20 tick, or was that last summer? There was a summer that we were trading the 20 tick because it was working better, but currently the 24 tick is optimal. Good question though. But yeah, every one of these bars is going to be approximately 15 to 16 points, and because they print when we move 24 ticks from the other direction. So yeah, you bet, Matt. It is. I totally agree. It's it's kind of hard to follow at first because you don't know what all the signals mean and what the patterns are. But once you get a hang of it, you realize that it's actually not as your brain makes it a lot harder than it has to be because your brain wants to understand what's happening every moment. And the truth is all you need to know is this direction already determined, and what is the pattern that I would need to see to take a trade based on that direction. A lot of these signals are just telling me the same thing. Basically, that sellers have momentum. The actual entries are, for instance, orange bars, and specifically orange bars that touch the top channel or this gray line. So once I know I'm short, I'm bearish. I mean, I can just wait for the orange bar, and then if I want to be more aggressive, I can take stars as entries. But if I want to be more conservative, I wait till it's pink bar followed by a star, or pink bar followed by an orange bar. So there's levels of confidence, and it depends on, again, how high of a win rate you really need, which for me changes based on how I'm doing for the day. If I'm trading really well on the day, and I've put together a pretty strong day, I will go ahead and up my requirements so that I can keep that green day. Looks like they're fighting this. I'm going to go ahead and exit this position. They're fighting off of this previous close, which is from Monday. That's Monday's close, I believe. And they put a volume anomaly there, and they came down and they found a buyer. I could technically hold it, but the problem here for me is that we're putting aggressive sellers at the lows, trying to fight off aggressive buyers, and we're not getting an immediate drop. So I might have been a little bit too quick with that. I technically could have waited for a close to the upside to be sure that they weren't just pausing. But when it aligns like this so perfectly to a level, and especially since the single prints end right here too, the aggression, it's kind of a nuance, but like the aggression is not producing the result that you would expect. And so you can either wait until that's confirmed, which would be this star getting taken over, or in other words, get trading behind it, or you just exit right away. So, and that kind of decision making takes a lot of practice, and sometimes I am dead wrong, and that can create some frustrating situations where you're thinking that, um, I don't think this trade's going to work, so I'm going to exit it, and then you see it work perfectly. That I've definitely needed to take a timeout. I needed to bench myself a couple times for those situations. This is actually bullish. That's interesting. This is a bullish setup where he traded underneath a star diamond and then came back with a star up. The problem here is that momentum has been to the downside. But if you were looking for a long, that's the first aggressive long that I'd be willing to take. But I just got out of the short, so I'm just gonna leave it be. But had I still been short, if I saw this, I would definitely exit. So now we're up 344. It's kind of, like I said, it's a little bit frustrating because you have to be fair and kind to yourself. You're not always going to get it right. And this morning I took a short where I really shouldn't have, and then I missed a long. So in your brain you immediately revert to where you could be had you traded optimally. But the truth is you just need to do the best you can and learn from the mistakes or whatever. But like, you're not going to learn from mistakes by ruminating about them. The more you think about, oh, how can I miss that and all that stuff, the less likely you are to make good decisions in the now. So what I do, I schedule a time to review and punish myself, right? With like trying to think about those things, like what could I have done better, and let's dig into this, see if I've made this mistake before, right? Like that work is the punishment for me making those decisions. I don't need to punish myself with like self-deprecating thoughts. So if I catch myself doing it in a trading day, I need to remind myself that, like, look, if you need to take a break and review that trade, do it, but close the frickin' broker, because you can't be trading when you're still sitting in that old trade that you've long gotten out of. Like, your brain is still stuck in that moment, and you're not going to make good decisions. So that's something my coach has worked on with me a lot, because it was a big leak in my system. Was just that, like, I was getting in the way, and I still do it sometimes. I'll get in the way of the process by getting stuck on something that's already happened that I do need to learn from, but I'm not going to learn from it today. I'm not going to fix it today. I know how to fix it, but it's a process. So it's interesting that they gave this aggressive long signal, and then they immediately responded with a speed bar down, which is basically just means they just crushed it. But look how these are all purple, suggesting that buyers just gave up and price dropped because buyers were pulling orders. They need an aggressive seller here to prove that they are still interested in selling. But when they put that aggressive seller in, it is vulnerable to get trapped. There are a lot of setups that are reversals that begin with a trader being really aggressive on the wrong side of the market, followed by a reaction. So they did get it lower and they didn't need to put a star in. So that is bearish. That is bearish. They didn't need to, like, the star only counts when it's closed. We get the warning that it might, like right here, the market's not, the bar is not closed yet. We get the warning that the conditions are being met for a star, but it doesn't actually count until the bar is closed. Once the bar is closed, it won't change. It won't go away. But while it's building, we have it so it warns us that hey, the conditions are there. There was an aggressive trader here. It's just a question of whether or not. See, now it's gone because now that aggression relative to the other side is just not that significant. And so what matters is when it's closed, what does it look like? So like these will never get stars, and this one will always have a star, but you can see that they like there it is again coming back now. But it'll disappear if we close bullish because you can only get a bearish star on a bearish close. So what this does kind of give me a hint at is that there are bears trying to fight for this bar. Even if they lose, I might not see the star later, but I can kind of remember, oh yeah, that bar was almost a bearish star, but the bulls took it back, right? Like you don't have to do that, but that can sometimes give you early hints that you might be trapping somebody. So let's see. So yeah, so there, it's right on the cusp apparently about whether or not it's aggressive enough to the downside to get that star. So there might be enough buyers in here where it's just not that much of a difference. But we'll see. It's close, isn't it? It keeps going back and forth. Which tells me that sellers are really trying hard to fight for this bar. And they're not succeeding. No, I mean, well, they might, but no, this arrow will only show up most likely if it's a bullish bar. They can show up on bearish bars, but it's a sign of momentum shift. Yeah, it's probably only going to show up if it's bullish. And if we get that momentum shift, you can see in the past, these can give me good pivots to sell off of later. See that? Right here. And I was just not fast enough to take this. I could have taken this one, but it was just too fast. By the time I saw this print, it was already down here. And I can't chase it. That's not allowed. Because there'll be another trade. Like, why chase it? I can mark it in, but I'm not going to mark it in if we're a bar lower. I'm not going to short if we're a bar lower than where the signal was, because the signal is for this bar's range. So what you can do is you can say, okay, this bar is from here to here. If we come back into that range, I can get short by leaving my limit order there. That's fine, but I can't be like, I saw this signal, the market's here, market in here. No, that's not acceptable, because you won't have the 15-point stop that way. You won't be able to control risk. All right, so we're getting into a purple pivot. So these are, I share these on Twitter, but you can see that they produce some sideways motion when it's not trending. When we are trending with momentum, these purple pivots are meaningless, and we rip right through them, like all the time. So if we are ripping through it, it's indication that momentum is unidirectional. If we pause and go back and forth in here, it's a sign that the momentum is actually slowing down, and we may be just consolidating. So it's not enough to give me a trade, but it's definitely a place to watch to see if they can successfully slow down this massive drop. What a move, though, huh? Was there really no news? Does anybody? That's great. I mean, it doesn't matter, but I'm just kind of curious. We saw the technical reason for it. I wish it would have set me up higher, but at least I got a piece of it. But this is a good example, though, where I didn't. So I don't know if everybody who's here was here with me earlier. I mentioned at the top that we didn't really have a great way to decide that this one was the high and that this one wasn't. So I didn't take this and I didn't take this. I waited until they got a short that worked, and then I took this. But the problem was we had the POC from the previous day below us, and so I actually took profits into this here on the purple bar. I took profits there and then opened the stream, and once the stream was open, we were chatting, and I missed this entry, which was totally valid. And then I saw this and didn't react fast enough because that was valid as well. So I had lots of chances to get short, and I didn't. In fact, I think I chose not to take this one because it was coming into the POC. I think I actually could have taken this one. It was later that it was too fast. So I chose not to, probably because we were coming into yesterday's POC. It went lower. I did not panic. I said, if we can come back up here, I will short it. That didn't happen, right? We waited. I waited for more signals. I could have shorted this, but I didn't. It was just a little bit too aggressive. So I wanted something that interacted with the top channel. So I missed all of this, but I got this one. And you'd think, oh, it's bottoming. You missed the short. Nope. You had plenty more. And even after I exited, which was, where did I exit? Here. I only got that little bit of it, right? And then we even did another one. They gave another entry if you were fast enough, and you could have gotten another drop. So the point of that is, first of all, to show that I'm far from perfect, and the algo is way better than me at executing, at telling me when to execute. I don't always catch them, but more important than that, it's to show you that once there's momentum in the market, you don't have to catch the beginning. The higher odds trades are on these little pullbacks, and yeah, maybe you'll only get 15 or 20 points, but you add up a handful of 15 to 20 point moves, and suddenly you've got a really good day on your hands. I mean, I've been trading 6 to 8 micros, and I'm up over $300. So I mean, I realize that's not a ton of money, but if you do that every day, and I try to do it every day, like it adds to my regular income nicely. So Matt, yeah, good question. So this is actually it definitely was a beast to build this. So the initial, my coach Simon built this algo, which is the trade and perform algo that we all use in the room that he runs. We watch his chart, and he teaches us how this works. He did him and other people on the that were in the room in the group before me built the algo. It's I think 6 years that it's taken it to get to this point. Then when I came in a little more than a year ago, like I had some of my own ideas that I wanted to add, and so I've added to the algo some of those ideas, like the green bars and the orange bars, were implemented into this one. Other ones I use, but nobody else in the room does. They have their own ideas. So we all kind of have our own twist on this system. But this system has been around it took years and years and years and years to build this. Yes. And it's a dynamic system. It's as we get new members and as people practice things and as the environment changes, because we're in a completely different market than we were 6 years ago, right? The stuff that was working 6 years ago is not necessarily an edge now. So it's had to be adjusted pretty much constantly based on like back tests. So a number of us in the group who are more familiar with how to do stuff like that and like with some programming skills regularly check these signals and report back on what's working, what's not working, and not necessarily just the ones we made, right? But not just the trades we have. But the great thing about having something so objective is I can literally say, every time I get a purple bar that has a red diamond, I can ask the computer to tell me what happened next, right? And then I can see like, oh, okay, I 50% of the time this happens, 50% of the time that happens. What did that look like 2 years ago? I can do that too, right? So we can actually see, is this edge improving? Is it starting to fade away? And that gives us forewarning when we need to start making adjustments. We've gone through many iterations of this, and I have 100-some studies. Most of these are hidden, see that? Because they're old studies that worked really well in different conditions but aren't working right now. So if conditions shift, the first thing we do is we go back to the drawing. We don't start from scratch. We don't recreate the wheel. We go back to history and we say, what is this market like compared to the last 6 years? When, like, let's see what worked then. Let's implement that here and let's see if that works. Or maybe we just have to tweak it a little bit, or maybe add something that we've discovered recently to some old idea, and suddenly we'll get something really powerful. So it's something an individual person could never do alone. Yeah. Yeah, but I will tell you, it's yeah, I agree. So I learned PineScript first, and it definitely has its place. I've done my own work in PineScript. It's not useless, right? It's for somebody who doesn't have like C++ experience and you don't know the language. PineScript is a great place to work. I'm also a big fan of Easy Language. I think that one with TradeStation is really powerful for people to learn as well if you don't have a programming like experience. But Sierra Chart's in C++, and it's one of the reasons why we haven't been able to offer the algo on um, other systems is because it's unique to Sierra Chart. So it's built into the spreadsheet system of Sierra Chart, which is basically just it's C++ with a couple, like all of the C++ things work, but then there's a few more codes for like bar open and bar close and all that stuff is added in there, but the basic language is C++. You don't necessarily need to know the language to be able to program these alerts, but if you don't know the language and you start fucking with it, you can mess it up pretty bad pretty quickly. So the first thing that Simon always does when if you because you can, there's like different way you can be in the room and just see his screen, or you can pay a little more and get it on your desktop like I have it. And the first thing he says when he gives it to you, he's like, right now let me show you how to make a backup copy for when you fuck this up. And I've done it twice where I go back, I go into the spreadsheet, I delete too many things or I change too many things and I can't get it to work anymore, and I have to start from the restoration place. So on a regular basis I will save these as I adjust things, because I like to tinker, and if you tinker you might fuck it up. So it is slightly fragile. And so I don't recommend that people who don't know C++ like dig into it too much and try to change a lot of stuff. But those of us who do know how to work with it, like I'll do a Skype session with other members and help them customize it. Like let's say you wanted this, but you wanted to turn off the triangles because you don't really use them, and you really want yellow stars and you want these to be a different color. That's easy. You're not going to break anything doing something like that. But if you're like, okay, I only want to see a white star when it follows a purple bar or when it follows a down triangle, I don't want to see this one. I only want to see this one. You can break stuff if you try to do that. If you don't know what you're doing, you can definitely mess it up. So it's customizable when it comes to like how it looks by anybody. Anybody can customize it without knowing anything about any programming. Sierra Chart isn't super user friendly, but once you learn how to use it, the interface isn't great, but it's you can amend it without risking breaking the system. But what you want to be careful of is if you actually try to adjust the parameters of the signals, you won't. Everything's password protected, so it's not like you can just say like, oh, can I undo that change, because you don't actually know what the initial conditions were, since it's proprietary information. So the solution to that is, if you want to tinker with it like I did, you need to save backup copies along the way in case you make a mistake that you can't undo. But yeah, it's definitely a powerful system, and it's changed the way I trade. I do. Yep. Yeah, I absolutely do. We look at the profile every single day. I put my the first thing we do in the morning, here I'll show you in the Slack channel, the first thing, actually sometimes the night before, Simon actually does our homework for us. I mean, we pay him to do it, I guess, but we all do it. Most of us do it ourselves as well, but at night, like this one, or sometime, yeah, so like NQ levels for Wednesday, this was shared at 8:41 p.m. last night, so he had already kind of given us some ideas on the TPO chart, on the profile, like where we might want to be watching for things. And this is all color coded, so we all know what this all means. And then if you want to, you can apply it to your own chart, and then I have some of my own color codes and stuff like that, so mine doesn't look exactly the same. But yeah, we do use it. You need to the TPO chart, the profile. If you're not at least marking levels to engage in the market with the TPO chart, you are missing out on a huge edge that most futures traders have. So the algo works globally all the time, as long as it's on your desktop. Simon has his screen running all day in the regular trading hours. So if you're just like a basic member, you can see his chart for that regular trading hours time. But then he has a family, he has other things to do, so he turns it off. But if you are a premium member, you get it on your desktop, and then it runs all the time. When it comes to the profile, the way I was taught is to focus on regular trading hours for volume and TPO when identifying your locations. But because I'm in Las Vegas and just the timing aspect, I do trade London Open often, and the algo works beautifully in the London session. So I will look at the 24-hour TPO and add the levels that I feel is important for the London session in particular. London session likes to respond to like Asian session, right? And the U.S. session likes to respond to London session. So, in my opinion, I think 24-hour charts are important to look at. But if you are trying to decrease your information, and for instance, like you are just taking too many trades and you want to find a way to improve your win rate, try using the regular trading hours TPO, the profile, and you won't take as many trades because you won't have as many locations, but the locations will work better than the 24-hour location. So I hope that makes sense. So that in the room, Simon will advocate using the RTH profile, but that's primarily because at least 10 of the members that we have right now aren't experts at the profile. So if you have to respect the skill level of the people who are kind of new, right? If you don't know it yet, you don't want to be like, I don't know, you don't want to have to worry about trying to determine whether or not this level is an 8 in confidence or is it a 10. Like, you just want to be given the level. Like, just tell me what to work, right? So he primarily uses the regular trading hours for that reason. And it does decrease the number of stops you end up taking if you focus on those levels. Me personally, I kind of like the London levels and the Globex levels, so I will add them to my chart, and I will trade off of them. But I have specific rules that I know, like, when they are applicable. But like I said, trying to teach that to a brand new profile trader or someone who's never seen the profile before, like, there's no better way than to like scare someone away from something to say that, like, here's this rule, but it only works until 11:30, and then after 11:30 you have to do this other thing. Like, no one wants to learn the system like that, right? Like, so instead you just leave out all the things that have those extra criteria and let people have some success with it first, and just not have as many trade setups, but their trades work out more often. And then as they want, if they want to trade more, it's like, hey, let me teach you this neat trick where you can actually turn on the 24-hour global session, and as long as you only trade them, until 11:30, they're going to work. It becomes like something you learn as an advanced technique. Yep. I agree with you, Matt. I think I find a lot, if you know how to read a profile, if you know how to read the TPO chart, the volume profile, the extra information is probably going to help you. If you are new to reading a profile, you're not going to know how to distinguish between the most important information and the least important information, and you're just gonna like potentially take trades in locations that you shouldn't be taking because you didn't think about the fact that, well, that was a Globex level and it had very low volume compared to RTH, and now we're back into RTH. So if we do respect it and then we run over it, it's an area that I'd only want to try once, right? Like, I know that, but you don't, when someone takes like 2 stops in a row and they're like, fuck, it didn't work. Like, what am I doing wrong? And then you tell them, oh yeah, you know that level I gave you on your chart? Yeah, it only works once. Like, right? Like that's not fair. So you just don't share that level, and you have your own criteria. And then as they the newer members learn, you can be like, hey, I can show you how you would have caught that trade that worked, but there's extra criteria to how to determine whether or not you can take it or not. And eventually, as you master more and more setups, you can add that to your arsenal. But I think a lot of people get really stuck on trying to learn everything about the market before they just learn how to follow a system. And you will do better if you just build a simple system that has like one or two trade setups and you just get really good at trading just that. Then layer on top of that with new trade setups and new ideas, and keep doing the old ones, but add a new one until you have enough trades where you're as active as you want to be, rather than trying to gain all the information possible and be like a generalist, a little good at this, a little good at that, but not really specializing in any one or two setup types. You're gonna, yeah, you won't be as consistent. And I'm saying that from personal experience because that was me. I wanted to know everything and I learned a ton, but I didn't really know how to apply it all to like make me money. It's like I could explain it. I knew I could see the chart after the fact and explain why things happened, but I wasn't able to like process that into a system that would actually get me paid when it's set up. I agree. I had a big breakthrough when I learned TPO and volume profile. I totally agree with you. Simon introduced me to Jim Dalton, his books and his YouTube, and that changed my trajectory for sure. And yeah, so when I read Mind Over Markets and I started actually like thinking about things from like the auction perspective, all of the other stuff that I'd learned in the past finally made a little bit of sense. And it wasn't just learn all these patterns because they might pay out. It was like, oh, this is why Head and Shoulders is bearish. This is why like bull flags occur. This is why gaps influence price on the next day. Like things like that start to make sense logically once you can have a constant. Because the beauty of the TPO is the fact that you have time as your constant. Here, let me show you one that's not so marked up. So like if you look at the ES profile, like every one of these, I guess it's kind of marked up too, but every one of these, there's time as a constant. I forget how to split these up, but I think, shouldn't it be split? Yeah. So by splitting it, you can, now I should have done it right at the level, but you could see, like when you take time out of the market and you make it a constant, and instead you just see how many times did the 30-minute chart pass over that area. You start to see things as like strength and weakness rather than just up and down. Like it actually adds another layer of understanding. Because otherwise, especially with like candlestick charts, like the time technically is constant in the sense that you always have 30 minutes per candle, but you don't really, like the range changes for each one of these and you don't have that clear sense of like how many times have we passed through this price point. Like you can technically count, but graphically it's not so obvious as this is, where it's like, oh, this is the point where everybody's agreed that it's fair price. So where do I want to be getting long? Well, probably down here. Huh, that's interesting. That was the low of the day. Maybe it's bullish, right? Like things just become a lot more simple. Yeah, exactly. Yeah, it's a beautiful thing. It's definitely if anybody watching has not learned the TPO and auction market theory, if you want to, like I said, you can start with some of Dalton's YouTube channels. He's not the most exciting presenter, but the information is great. Stoudemire's really good too. Doesn't have YouTube, but his book is excellent. Yeah, just learning to understand like why the market moves the way it does. It might not, like, I don't technically trade the profile, but the by keeping an eye on the profile, it tells me where I should be looking for trades. So like for instance, these single prints up here, rejecting those single prints is usually bearish. So if I was waiting to get short again, a spot to look for a short would be around here. Now you could just say it's previous support, so it's new resistance. Well, yes, but structurally it actually makes sense that they would reject out of those single prints, not even if they didn't try to defend it here. So let's see. The best setup you can get right now is for them to actually sneak up above this level and then reverse immediately. Those apex traps are great. The only problem is they work best on the long side, and this V bottom is a little bit scary, particularly when you have these momentum shift arrows. It's generally suggests that even a pullback into this area would probably get bought. So yeah, well, if you were bearish, this is exactly what you want, is for them to spike up and then roll over. But you have to accept the fact that it might not be bearish anymore. And there's no way to know for sure, right? You just have to think, am I willing to risk a stop? Because you're not going to know one way or another, ever. You'll never know if a setup will work or not. All you know is what the probabilities are, and then you can determine like what conditions those probabilities are most likely to be in your favor. Like when does it usually work versus when does it like usually stop. And the number one thing that we found recently is longs just work more often than shorts. The shorts pay off big when they're right, but the longs work more often. It might take you 3 tries to get the short right, and the long might work the very first try. And that alone has pushed quite a few people in the room to just completely trade only to the long side. There's a lot of days where they do barely anything because it's just straight down, but the days where we aren't going straight down, they do well, and they don't take as many stops. I was suspect about it because I love shorting, but man, like watching them post their numbers and knowing where they came from when they were trading both sides, it's like suddenly they just see the market more clearly because they don't even have to worry about whether or not it's a short or not. It's just, is it a long or not? It's not, is it long or is it short? It's just, is this a long setup or is it not a long setup? So they did not, they have one chance to set this up, which would be closing bearish on this bar here. It's got to be within 1 bar or less. So that's 1 bar. So they can't do 11.5, If they do, there's no way I would short. If they do hit 11.5, first, it's a valid short, but I don't love it because we have this speed bar which should have produced an extension, and it didn't. You can see that when it's bearish, they immediately drop it after those, like repeatedly. So when that doesn't work, something's up. And what's up is that they had a momentum shift right at the purple pivot. Look how they couldn't get under it with any volume. Once they did get under there, buyers just pulled their orders, and then suddenly we got a volume shift. So purple bar, green bar at location is a strong buy, but it's hard to do that off the edge like this. But like here it is again, purple bar, green bar should extend, and it does. So if it's bullish, those little patterns work, and you can get 10 points here, 15 points there,
and rack up a pretty good day. The only problem is when you try to do it while it's bearish, because like purple bar star tries to go, fails. Purple bar green bar tries to go, fails, right? Because you're trading in the wrong direction. Whereas pink bar, orange bar, huge payout. So once you figure out the direction, or you just know when to stop buying, because like it's not working, or it's unlikely to work, yeah, you can make up for those couple mistakes relatively easily. The bad days that I have are the days I don't follow the algo. It's when I decide that I know better, or that I think I know what's going to happen, even though it hasn't happened yet, and I start trying to anticipate the setups, even though they haven't printed. The days I just wait for the setup and just do what the algo says, I usually make money. And you can, I haven't looked at my win rate, but I bet you I've shared many times before, it's usually above 55 to 60% of my good days. So I've got a win rate of 73% out of 23 trades. So with net P&L $300. And like I said, 73 win rate might sound like a lot. It's good, but that's actually pretty average for me as long as I'm trading well. Yeah. And that's just the only days that doesn't happen, Matt, are the days that I fuck up. Like if I just run the system, that's pretty normal. Now, what I've struggled with lately is increasing my size, and that's all psychological. Because had I taken these trades with 2 NQ contracts rather than 8 MNQ contracts, I'd have like a hell of a day. Like I'd be making more today than I do at my regular job. But the tentativeness of like, am I in the right state of mind to actually execute appropriately so that I can risk losing $700 in a trade? Whereas like that, it takes a lot of confidence. And there's sometimes when the day doesn't start very well, because today I was actually down. Those stops all happened in the first hour because I was shorting, thinking we were like balancing, and so I was trying to take shorts here and here, and then I'm like, oh fuck, it's not short. And then thankfully caught the long, but a piece of it. But I mean they were mistakes. There were mistakes early on, and the concern I have is if I'm trading the big contracts and I take 2 or 3 stops early in the day, like, and I'm down $1,500, am I going to be able to stay calm enough and stick with the program and not start like trying to scalp my way out of it and like do things that I'm not supposed to be doing, like tilt basically. It's just hard. Like, and especially when I've gotten really good at trading like this amount, like I used to only trade 4 contracts of the micros. And then I built up to 5 and then 6, and now I've gotten to 8, and I'll occasionally trade up to 15 or 16 if I'm having a really good day. But there is this weird psychological level right about somewhere between 10 MNQ and 20 MNQ, like 2 NQs. It's been brutal. Like the days I don't do well, I tend to be trading the big contracts. And it's frustrating because it's like in my mind being down $1,500 is like that's like 4 to 5 days of hard work in my mind, right? Whereas it's really not. It's just a couple trades as long as you're trading that size. But being able to come back from those early errors has been way easier when size is smaller, because like the idea of coming back from like a $500 or $600 loss is like, I can do that. But when it's twice that, for some reason my brain is just like, oh, you're gonna blow up your account, like, and then the result is I do stupid shit that makes it likely that I'll blow up my account. So it's just funny how your brain like self-sabotages like that. While that purple bar green bar worked beautifully, you had to be really aggressive to take it, but the location was right. It was right at the purple pivot. I did not think that would happen. I'll be honest, I did not think that. It makes sense. It was right off that 1 standard deviation of the anchored VWAP. I mean, that has been stellar lately. And I shared it on Twitter. It's nuts. Like, if you get a trap under that, those moves are huge. This trap under it, close above it, right now we're just freaking bouncing right off it. Like, everybody's watching it now. But you can see you can't just sit with orders at these levels, right? You can't just like put a sell here because you'll get stopped out and then it'll go. But if you can wait for the trap, yeah, it works. And if you look, like, that was right at 9:30 Eastern, so that's 8:30 Central. I got this set to 8:30 to Central Time because that's what Simon trades in. And when I'm in the room, I want my times to line up to his so that when I share things, no one gets confused, even though I'm on Pacific Time. So 8:30. So the low looked like this. It went underneath this this low volume node here. And then they trapped sellers with that green candle. I didn't have a great way to catch that, but they did give us entries after that. If you would have just said, okay, I see that this is the wave to the low, so anything that breaks above that should be good to go. You could miss all of this. Even if you missed all of this and you just waited for that to break right there. So now it's above right there. Green bar. I think it took 2 tries if I remember right. Yeah, so you got a little piece of it. It might have stopped out. Star. Oh, here, 2 tries. Got a piece of it, stopped out runners, star, and it's gone. Now, here's the sad part. I took this one, and I skipped this one. Thankfully, I was able to get in later after we took off here. So I missed this and got it. Nope, it wasn't that one. Wasn't that one. It must have been here. Is that possible? Yeah, this one. And I was scared buying up here. I was like, fuck, this is so extended. And then it rolled, right? And then I did the stream. We got a couple of shorts. But I just, once again, just to demonstrate, you don't have to freak out if you miss a move like this. It's not a big deal. You just wait until the setup tells you that it's good to go and you take it. And then it might stop, in which case you got to decide, do I want to take it again, or if it sets up again, or do I take a break? Yep. There's just, I do not need to be in the market to make good money in the market. Like, I don't need to be in the market all day long. It's not necessary. I can be in it when the odds are high that I'm, like, I've told people before, what I want, this game, I'm telling you, you don't get any extra points for shooting 3 throws in this game. In basketball, the further away you are from the basket, the more you get paid, right? Like, but in this game, that's not the way it works. You just get paid whatever happens. You don't know if it's going to be a huge trade or a tiny trade, a tiny profit based on like how hard it was to like hit it. You don't get extra points just because it was a tough entry. There's no, like, there's bragging rights maybe, but 20 points here is the same as 20 points there. It's just 20 points. So it doesn't have to be the first 20 points to the upside. It can be the 4th time that they go 20 points to the upside, right? Like, getting this is no different than getting this. They're exactly the same. And like that, like really understanding that was critical for me. Like, the only thing that was keeping me from catching the second 20-point move was being stuck wishing I would have taken this one. And that's brutal, right? But that is our brain. I'm going to run and get a refill here. Hold on real quick. I will leave you guys with some tunes. I will be right back. But I'm getting thirsty. I can feel my mouth getting dry because I'm talking so much. So let me refill this, and I will be right back.
smack, backhanded. Words are always spoken, but they smack like rubber bands did. Now hold out your hand, kid. Hope I'm trying to help but kick you down, bitch. Act like there's no promise, but you found it. I told you what was hurting and you poked it. I told you how they hurt my heart right before you broke it. Anything I tell you, you'd provoke it. Find a fucking problem in your own shit. I never act the victim, that's why you don't know shit. And every time I speak my heart, you hop up on that whole shit. I've been fucking changing while you won't, bitch.
Turn that off. Cool. So just straight V bottom up. Like I said, I'm glad to see that the green bars are showing up, but I was not aggressive enough to take them, and that's all right. So we're back into the. Are we in the gap now? Let's see. Are we back to the gap? Yep. Back in the gap. Right at the top of it. And on ES. Wow. Look at the disparity. It's the look at how different that is. Filled the gap overnight. Never looked back until just now. And it couldn't even get back to that gap. See that? Kind of surprised, honestly. I would have thought that we're gonna but let's think about that, what that means, right? If they don't come back here and develop volume here and instead continue higher, that is super bullish, right? Because it would be normal to come back in here and then bounce out of there. That would be very healthy. And a lot of people are like, oh, it's going up too fast. It's like, it's going as fast as it needs to go because bears are ultra trapped.
Don't be scared out of a lung because it's going too fast. But yeah, I agree. I've noticed that too. It's been a while since I've seen that where they're so different. I'm not. I can definitely remember times when this happened in the past, but maybe not to this extent. Like look at RTH. I mean RTY. Like wow. Crazy. Completely different. Location wise, completely different. So I mean, I know it's not unheard of. And then what I think is really fascinating is that the bonds, the long bond, or wait, this is the T bond. So this is the what's it called? The treasuries are actually like breaking out of this channel again. And when this one failed, I was like, oh wow, we're going a lot lower. I didn't take a short or anything, but I was just like, wow, this is big trouble. Like rates are going to go sky high. And they went a little lower and they couldn't find any more sellers. And it's like, oh, they're headed back higher. And what do you know, back up on top of this. So it looks like they're trying to find a bottom in bonds. And that would be welcome news because that would mean that the rates will decrease. So that'd be a good thing for the economy anyway. But yeah, just I imagine that has something to do with the fact that we are so divergent from one to the next. The small caps to, and then of course the earnings, the tech earnings just getting so messed up. And then I mean you always want to keep an eye on like crude too, and like crude is back up to this purple pivot here, and so it might. I mean that was a pretty gnarly move today. Someone got eaten up pretty bad here, but you can see that like they don't always just continue higher, but it kind of looks like it has to, doesn't it? Like they got completely stuffed down here, just like the bonds, same exact thing. And consolidated, broke out. As long as they can hold above this, like I think I'd be a buyer on a dip for crude. And then, of course, the ultra. Hold on. The ultra signal of risk on is your Bitcoin. Shift this up. Voodoo range works on Bitcoin too. Okay. Look at that. That's nuts. Right? That's from yesterday. So like that never even slowed down because they don't have any earnings. Bitcoin didn't miss on its. There we go. Bitcoin didn't miss on its earnings. So yeah, it's sitting up there. And if you look back, what is that related to? It's way back. So the August lows. No, not August lows. Mid August. So here's a trick. Measure the volume profile for this consolidation. And then turn off, just the indicators so I can see what I'm doing. Mark off that volume area. Blue. And then then that should be like that volume area of that pivot, if we can get into it, would suggest that we're going to go through it. If this lower one acts as resistance, then the likelihood that we get to the high is quite low. But if we can break into here and close in here, chances are that area gets moved through rather easily. See that? So, been doing some research on the Voodoo range. That's why there's all those numbers there. So one or another, everything seems to be trying to push higher. but I'm honestly happy to see that we're maybe getting a little bit of rest. I was nervous this morning when I saw it break through yesterday's high and just keep going. I was just like, oh great, another bear market rally that never lets anybody jump on board. But if they can pull back just a bit like this, gather some more longs, and then make a run for it, like maybe after someone has good earnings, like that could actually be pretty healthy. So I'm not a huge like macro person or anything. Not even considered a tourist, but I'm definitely always been curious about macro. I just don't let it influence my trades because my trades are on too small of a time frame to really think about it. But it is useful to be aware of what's going on in the rest of the market because you might be able to get a bias like that, like recognizing that literally every market is risk on right now, and bonds are actually rising as well. So it's like, meaning rates are lower relative to like a couple days ago. Yeah. That's what I thought too, Matt. I thought maybe Apple might miss. If I had to, like, I was actually thinking about maybe getting. I should have done it this afternoon. Maybe getting some Apple puts, like literally just to be a punter. But like, if I was gonna guess, like, I usually don't trade earnings, but if I had to pick one, I'd probably say that maybe Apple misses, and the 145 puts looked juicy. Yesterday, when we were at the highs, but like I said, now after that big drop, they obviously are probably going up in price, yeah, because like Apple, they would have been good yesterday, and we had an opportunity where they tried to close that gap, but now they've failed. So you can see I marked off some levels here, and I wanted 145 puts because I thought that's probably where we would be headed. Is that general area. I trade options maybe a little bit differently than most people. I don't really care for like the 0 day till expiration. I'm not, I don't know. That's just not my style. I would rather go like maybe 2 weeks out and just like manage risk by like picking a delta that I can that's gonna move at a speed that I can actually respond to, rather than trying to get something where it's gonna go up maybe 200%, but if I hold it till the end of the day, it's gonna be worthless. Like, I'd rather trade it similarly to like a futures product. I don't what I'm trying to say is that I don't like having to think about theta when I day trade options. I'm fine with thinking about theta when I'm swing trading options. I don't want to worry about it while I'm day trading it. I don't want theta to have a huge impact on like whether or not I can cover now or if I should cover in half an hour. If it's the same price, I want it to be valued about the same. And so to make that happen, what you end up having to do is pay more premium, but you just have to follow your rules so you never let the stupid thing go to zero. Like, you actually just exit the trade for a loss, like take a loss like a man. That's the right way to do it, in my opinion. I think everybody's been kind of addicted to this idea that they might like 3x some like $50 contract that's going to expire at the end of the day. It's like, I'm sorry, but if what you're trying to do is make $150, like, let me show you how to actually trade them and not like buy a $50 lottery ticket and see if you can turn it into $100. Like, I'm just, yeah, like, I'm not a fan of that technique. I get why people do it, but it just it fuels my like addictive personality. It doesn't go well for me. Yeah, for sure. I mean, I've made money with options, but I've also lost money with options, right? Like it's definitely a love-hate relationship. I totally agree, Matt. Totally agree. They can be amazing tools if you have the right strategy, but which I guess isn't that different than futures. But what's frustrating with options is you can do all of the technical analysis correct, but not have enough time or not have enough open interest or whatever, and like suddenly your trade just like there's so many ways it can fail other than just being wrong. And like I'm wrong at least 25% of the time, usually more than that, you know. And so it's like I don't need to lose even when I'm right. So with futures, it's just so much more. Like if I'm day trading, I'm just gonna use futures. It's just so much more direct, and I can keep my win rate high with futures just by following the system. With options, I'd follow the system beautifully. I'd lose, and then I'd tilt and give away more money. That was pretty much my experience with trying to day trade options. Like I said, I'm totally cool with swing trading, bear call spreads, and all that. That's fine, right? Like, keep doing that, right? There's nothing wrong. Like, you're just using options in a proper way to manage risk. That's cool. But trying to use options as a like trading vehicle and trying to trade them like futures, but using options, I don't know, man. I know people do it, and there's people on Twitter that I've interacted with that I know are legit, that like do it really well. So I'm not saying it can't be done. I'm just not that skilled. Yeah, I think it takes a lot of like mental fortitude to be able to not blow up when things don't go your way despite you doing everything right. And that's, I don't know, it's hard for me to want to do it when I have the options to just trade futures, when I have the choice, I mean, to just trade futures. Like, why not? Why lose? And of course they say, well, the leverage, it's like, dude, I can get as much leverage as I could like ever dream of with the NQ or the ES contracts. I would never want more leverage than that. Leverage is not a problem for me in that sense. I never feel like if only I could buy more contracts. That's never been an issue. I mean, unless I wanted money, if only I had the money to buy more contracts, sure. But it's not like, oh, if only I was able to like, run this strategy with 30 contracts instead of 3. Like that, my coach does that all the time, you know. Oh, and in case everyone's wondering, the reason why this is in Sim is because my cash account runs through Sierra, and I run all my prop accounts through Rhythmic. So, yeah, I've got Rhythmic for the prop accounts, and I've got the Sierra routing through CQG for the cash account, which I don't trade very often, but I like to use it for manual backtesting. And practicing execution. So I do lately I've been turning this on Sim, because otherwise what I end up doing is I start like exploring and doing like getting into the lab and thinking I see a pattern and trying things, but doing it in my cash account, which is just dumb. Like, why? Why do I have to spend money just to see if something works? Like, no, just use the same account. But out of like laziness and like excitement that I might have found something that works, I'll just like do it in the cash account and then lose money, and then I'll be like, oh my god, now I've got to fucking like withdraw from the other ones if I want to make that back and whatever. Like, it's so I'm just leaving it in Sim now, and yeah, that way if I want to see, like right now, if I'm like, I wonder if this will work, I can just go buy market
Order filled.
and like just see, like, this is how I would trade it. I put my target here, and I don't have to worry about losing money, but I can practice like the actual execution. And if I get stopped out, there was no setup there, by the way, but let's just say there was, and then I can like learn from this and practice like not moving my stop, practice finding the right place, practice getting into the market and adjusting. I can do all that right on the screen, which people appreciate when they're watching. So that's why I've switched it to Sim, because I don't want to have to spend money just to like experiment with ideas. I want to be able to do that in Sim, and then what's cool about Sim is that it actually tracks your results. So like if I go with ones, like what I'll do is I'll open up like a random day in replay, and I'll be like, okay, the rules are I can only take Apex trap trades, purple bar, green bar sequence, and this other sequence, and that's it. And then I can go through and try to take as many as I can, and with execution best I can, maybe sped up just a little bit so it doesn't take forever. and then I'll go back and see like what was my win rate, how would I have done if I would have done just those 3 trades all day, and it's pretty cool like what you can learn and how you can improve your bad habits by like just prove to yourself for free for you invest the time but no money, but just prove to yourself that if I just followed the system, I'd be doing okay. And like I said, I was understanding this system. I was understanding it, but I wasn't really trading it with confidence until I got it on my desktop and I started to really dig in and actually review like things like that. Like what would have happened if I would have just did this and actually replayed it and tried to do it. And like all of a sudden I was like realizing like, oh my gosh, like I can actually make a lot of money if I just do this and stop like messing around trying to guess. Like just wait for the algo to tell me what to do. It blew my mind sort of that it's almost that easy. It's like how it can't. I wanted to complicate it more. Like I wanted there to be some sort of like it was almost like I felt like if I accepted that the algo was better than me at reading the market, that somehow that'd be like some kind of a diss or something. Like I had this ego about it. Like and eventually I'm like, wait. Like you're telling me I can just take the trades like I've been taught, and like even though it'll stop out sometimes, I'll usually make money. Like I don't actually have to sit here and like analyze what's going on. Like I literally can just wait for the signal. And like I said, I didn't believe it. I didn't want to believe it. And then I went and get through it. I'm like, oh fuck, it actually works. And and then I'm just like, okay, I'm just not gonna enter trades until the algo tells me to. And if I want to enter a trade that's not a setup yet, I use sim, and then I can build new alerts based on when those sim trades work repeatedly. It'd be funny if this one actually worked. I don't think there was a now. If this is a purple or I mean a green bar, it's technically a setup. Here I can't see, so let me just. How do I exit this? I forget. There's no X. Close. Flat and cancel.
Order filled.
Okay, so the last apex is down here, but then there's one right here. Did we get under it by 1 bar or more? 1 bar, but it's a green one. I don't like taking them like this. And this just kind of looks scary to me. Like, why should I long when it's dropping? Like, buyers are pulling their orders. Like, they might not give me a choice anyway. I don't have a setup here. But I'm just wondering if I got a star or a green bar here, could I be a buyer? Wait, let me see if they put in a potential high here. Where's the volume? They got volume below the wave to the high, so it's bearish. Okay. Alrighty. So we're looking for shorts, not longs. So come up here, reject with another yellow star or an orange bar, and we're good to go. Okay. Like I said, not what I would have thought right away, but that's what it says. So I would need location though. I don't know if I can line up location here. Let's see what ES looks like. See, it was an overnight resistance in this area on ES. See, NQ is all the way down here. ES is like in a relative location. It's like here. See that? So it's just weird. Usually they're lined up and they're not. And so it's kind of throwing me for a loop about like, wait, NQ probably won't bounce here, but ES might. And if ES bounces, then what if NQ bounces? And it's like, oh wait, we are at the purple pivot and this VPOC, like, or this VWAP line, like maybe it does bounce here. And that's just, yeah, it's making me overthink it. But the algo says bears are in control, so we just wait. But you can see bears were in control here, and they did a V out of it. So they did signal, but you had to be really aggressive to take that because it didn't look very bullish. But this one would have been easier to take. And notice the bear signal failed, which makes sense because bulls had momentum. So they didn't get a signal up here, unfortunately. Got underneath the volume, printed a star. What we want is a retrace. Now, this coming on the down bar is interesting. That suggests if buyers can get back up here and develop volume above, that they've trapped sellers. So that's, we saw it here too. See how once we got above this, this became a pivot. See that? So that could happen right here, where we get above it, come back, pivot off of 11,510. That could happen, but they need to bounce it for that to happen. And if they don't, or if they bounce it and they reject off 11,510, it's a short. I don't love shorting into these purple pivots when it's not super like trendy. If it's just balanced, they tend to react as support. Like, so the location's not perfect, which is why I was wondering about ES. Let's take a look at ES. Wow, we had a really good signal here. Jeez, missed that. The star with the VPOC reject signal, the yellow. See, orange bar with yellow, star with yellow. By themselves, they're not as strong. Actually, with the diamond, they're pretty good. We'll do a review later. I'll show you how that works. That I have not gotten that signal to work very well on NQ, but shit, it keeps working on ES. So, it might. I have not committed to taking real money trades with that signal yet, but I see it working over and over again on ES. So here we have a potential apex trap if they come back long, right? It's the same. It's one bar, but you're trading right into an aggressive trader here. That star suggests there's an aggressive trader in that bar, and they've been bearish. So that guy probably tries to defend his position. If we look at the delta, see that negative 1,423 right here. So he's probably not going to let that go very easily. Probably. If I had to guess. And look, it was actually here too. Was there news? Is that what that was? Again, it doesn't really matter, but I'm just... I see political news. I'm not going to talk about that. U.S. government has received information that terrorists may be planning to conduct an attack in Johannesburg, South Africa. Okay. Russia's apparently in a holy war. Okay. Yep, we already know that crude settled higher. I don't see anything, so... Yeah, not on my Twitter feed anyway. Let's see. Well, we just wait. Oh, yep, there's that absorption signal. We might see that work this time. We'll see. I forgot to follow up on that. Did we just not reach it last time? Where was that? Yeah, it's right here. So we would have had to come back, oops, to this and then reject. Did I just forget to mark it, or did we not make it back there? We did not make it back there. Okay. Interesting. Okay, so see the little blue dash? So it's an indication that the buyers are absorbing sellers there. Now, it'll go away if we trade through them, most likely. But if we can hold that, and they close higher, and then it can become a pivot on the way back, on the next dunk in, like the next, what's it called, dip? Can't talk. But if they trade right through it, it's going to disappear and it doesn't count because the bar's not closed. So it's just warning me that the conditions are right. Oh, look, it's on ES too. Here, I can show you. Here, they show up more on ES. So look, let's see if this one worked. So you've got the bar there. Sellers were absorbing buyers. Does not mean to short immediately. They get behind them, come back over them, and you can see that when they came back over them, we got an aggressive seller, Now, any retest of that level is a sell. So it takes a little bit more patience and forethought to get those setups to work, but they do work. They do work. And then, like I said, these yellow and blue dots, the squares, they don't work as reversals. But for instance, if you already identified that you're bearish, then generally if you get the yellow box with another algo signal like this, or this, or this, it's going to be good. And the blue ones shouldn't work. Should not go very much higher. See how it's like dead, dead, dead. Almost dead, dead, right? That's a sign that bears are clearly in control because the blue ones aren't working and the yellow ones are. Now this one technically would have stopped out if you put your stop right here, but I wouldn't have taken this with my stop here because the resistance is actually up here. So if I saw this signal, what I would have considered doing is on this retest taking a short up here and then putting my stop above it. That would be as soon as if it started to turn around, like in here, basically. After it peaked and then started turning around, I'd go ahead and short it even before this one is printed because we're bearish and we've got a yellow square with an orange bar. The problem with this one is it was just not properly positioned because this other one got higher, so they were able to sweep those stops before they went. But interestingly, even without those boxes, if you just use the apex trap trade, you get the entry here. So it's how lots of ways to get paid. It's just a matter of picking the ones you want to do. Okay, so we did this one print too? This one did not print, but ES did. So that's interesting. And then they're trying to print another one immediately. Buyers are trying to absorb this. And again, the location kind of makes sense. It's just in an area that's usually very choppy. Those purple pivots can get kind of choppy, but we might be able to get a little scalp here. Purple bar, green bar would technically be along here. I don't know if they'll get the green bar though. Purple bar star, not so much. See, what I really want is for them to take this low out. Purple bar star with the diamond. I'm going to wait. So that diamond suggests that we have either a lot of volume or else some other volume anomaly like a delta shift. When they're at support, it can work, but we really want it to be aligned with previous support. So like if it showed up here, it makes sense. The fact that they're defending above that is sometimes a sign that they don't think they can hold this. It's like raising because you're afraid that you can't call a raise, right? They're raising hoping like it's a bluff, basically. Potentially. And the fact that I can't tell if it is or not makes me decide I can't take it. It's still valid if you're being aggressive, and the fact that we got this absorption on ES made it a better trade. But usually I only take these diamonds as immediate entries if we have support aligned pretty much perfectly with that range. So it would mean we'd have to have bounced at the purple pivot. This one was awfully close, and maybe that's good enough, but in my experience, this is actually worse when it's not. What we want is slightly below this, not slightly above it. And I know that's kind of nitpicky, but I've watched these for long enough, and I know when they print like this, the likelihood that you're going to get like a 50-point move is just really not very high. Sometimes you do get 10 or maybe 2 on ES or 10 on NQ, but the chances you're going to get 15 to 50 are pretty low because you don't have previous support aligned perfectly. Again, you wouldn't think those 5 points would matter, but you have to think about the fact that like everybody knows where that low is. It's not just like my edge. Like everyone knows this low is here. And so if they're aggressively buying just above that, like after a drop like this, it looks to me like this is this guy saying I'm gonna need to give up if we trade any lower. So I'm gonna give it one last shot right now and see if I can save it because I don't want to be long if this gets broken. So it when this happens, it makes me less excited about buying this. Hopefully that makes sense. It's just, like those 5 points really do matter for me. But what you really want to see if this does work and you get big volume and it's gonna rip is you want to see immediate. You don't want to. I would not buy this dip because I'm telling you these get traded behind all the time. That's why I've got the signal there. It's actually a caution signal, which is why it's the same color as the pink bars, because that's also a caution signal. It's like if you're trading with momentum, then volume's a good thing. More volume is it adds to the thesis that momentum's in the market. If you're fighting against momentum, high volume is a problem. Oh shit, that's a short. Fucking A, I missed it. I was like just zoning out. That's a short. Let's see if they can come back and set it up. The location's not perfect, but that is technically a short. Maybe we can take it on smalls. The location's kind of gross. Fuck, get back up there. Give me an entry. I want them to I need them to come back up to this level, 86 at least. I missed it. Whoa, wait. Come on. I don't love selling the purple pivot. It's usually choppy. It's a pivot. You really want to get away from this and then retest it from below. But that was a valid sell. But I saw it. I'm like, hey, look, an orange bar. I'm like, fucking hey, that's a sell. I wasn't even ready. I wasn't even thinking about the fact that this is unlikely to work and that I don't really want to buy down here. And so I didn't take it to the next step to think, wait, that means if this sets up short, that I should be getting short. Where I really want the orange bar to show up is here. But you don't always get what you want. So that's interesting. Is that my 80 tick beeping? No. Is it this one? Yes. Okay. Means we're far away from that channel. That's what it is. Okay, cool. It's this time frame. Just wanted to be sure that I didn't have something set up wrong. Damn, it set up on an ES2. I had 2 chances to get it. Fuck. I was just lazy. I just totally flaked on that. Like, I literally looked right at it, and I'm like, wow, an orange bar, that's kind of bearish. I'm like, fuck, I can short that. I was so focused on, this isn't a long, don't buy the dip, that I was like, wait. I could be getting short. That was sad. Clearly a short here on both of these markets. Both markets were a short. Notice that the buyers absorbed, but yet they traded behind them. This may mean that this whole area could become resistance now. And so, see, if you wait for these orange bars to be aligned with the top of the channel, you could be waiting a long time. So sometimes you do have to be aggressive. So now what I want them to come back up and reject out of the purple pivot. This purple pivot here, I want them to reject that Otherwise, I'm going to have to wait until they get above the orange bar and roll over. I'm not going to look for longs, even though there's a chance that they could test below and fail. I'll show you that. Where is it? NQ. So we've now gotten below this standard deviation VWAP, and we've gotten below the voodoo range level, and we've gotten below this consolidation. But notice the open pushed us all the way down to 11,433, and so did overnight. But remember, these were aligned so well that I said that's probably day traders playing with this, and therefore big traders, heavier traders can actually take this easily. This low should be an easy target to take out if there's higher time frame traders in the market. And that's just basic auction market theory and TPO profile stuff. Like, if that doesn't make sense, you need to go study Dalton. Now, I will say, if they can't do it, right, if they fail to take that out, that suggests that there's no higher time frame traders in the market currently. So, and that's hard to believe considering that's this move, but what happens is that there's just no liquidity in here. So the day traders can just pass it up and then pass it back, and the buyers, if it's high time frame buyers sitting down here, they will wait for this to get taken out and then they'll buy it. If it's day traders, they'll just like try to buy this support, try to buy this support, try to buy this support, try to buy this support until they run out of money. Because all they need is 15 points. They'll just keep buying them over and over again until they fail. But then you can see up here, it appears we did run into higher time frame sellers, whereas down here, I don't have evidence that these were longer time frame buyers. So while they could hold the voodoo range level, we've definitely seen that check below and fail, or test beyond, no close beyond, we call it. But it's a test below and fail to keep it below. So that would be bullish if it happens. And it would align with this setup. See, if I put a line here, and I said that we can trade bullish as long as we only trade one bar below that and then bounce back. We've got one bar, yeah. So it can't go to 56.25. Otherwise, that is broken. But you can see it's still good. The setup is still good on the 32. So we may be able to take a long here. It's a little bit iffy because we want to short up here. So it's like, do you really want to long this? Depends on how confident you are that there's a chance that you get that retrace. I kind of don't like it, but I'm supposed to do it. So if it sets up, I'm supposed to take it. I can wait until it pulls back and try to take it for cheap, but in that case I might miss the move, and then I have to explain why I didn't take it. So in my review, it's important that if the trade sets up that I have the intention of taking the trade, unless I have a rule that keeps me from doing it. But here we're bouncing off the LBN. We're trying to save the voodoo range. There's reasons why this could work. The reasons why it couldn't work is that that poor low at the low is acting like a magnet, because people want to know if we auction below that, if there's buyers waiting. So I really want the short up here more than the long. But just because I don't think it's going to work doesn't mean it won't. I do not have any clairvoyance. I have no way to know whether or not this would work or not. All I do know is that if it closes at 11,474.50 before it gets to 56.25, it's technically a long. I don't like it, but it would technically be a long. The only thing that could keep me from trading this is the purple background here, which suggests that I wait for them to get the yellow line above this high before considering a long. It's a more conservative strategy, but it can keep you out of trouble because that purple background suggests that there's momentum in the market. And you really don't want to fight momentum. Now, thankfully, the algo, especially to the long side, it will rarely trigger if there's to the long side if there's momentum here. So, yeah, and if it's a pink, now I can technically take it because it is. See, I can take that.
Order filled.
Even though it's pink because it's at location. So 58. So we'll go 57. I don't know if it's going to work. No idea. But it is technically valid for a trap trade. And, you know, when they work, they work. So we'll see. Now, this might end up just totally stopping out, and that's how it goes. It also might only go to 10 points and then stop out the runners. And if that's the case, that's how it goes. But we have the voodoo range level here. We have the trap trade from over here. The one problem is momentum, going in the wrong direction. Location is good. The trigger is valid. The momentum suggests that we might not get much of a lift. But like I said, sometimes the algo just knows better. And right now it's saying it's worth a shot if we're at location, and we are. So it's aggressive, but I am long. And I have no idea if it's going to work. If it doesn't work, I won't be taking another long until we get over one of this because that it suggests that it wouldn't work. The only reason this doesn't work is because momentum is increasing to the downside. That's the only reason this doesn't work. So I don't want to take another trade right away, even if it triggers, if this stops out, because you don't want to be fighting momentum. Totally different situation than like if you're balanced and they stop you out. Well, then you might just needed to. Maybe they just needed to go collect some liquidity, and then it can continue the direction you want. But in this case, if it doesn't work, I would assume it's not working because bulls just have no chance. Because if it's going to lift, this is the place that makes sense. If it doesn't lift, I just take a stop. And stops are part of the game. And they're going to happen more in the afternoon than the morning. And they're going to happen more on the short side than the long side. Like, we have all those metrics. We know all that, you know? So, in this case, I've got most of the odds with me, and I just have to try it and see what happens. If they get underneath that bar, they're going to stop me. I've got one extra point underneath that bar. Otherwise, that's it. I put my stop typically 1 point or 4 ticks below that low. They have gotten within 3 ticks. No, 4 of stopping me out. Has not happened yet. I'm still long. Regardless of what the results of this is, I will still be up good on the day. That's important to understand. Eventually, if you're having a really strong day, it can make sense to give back, and then once you get to that point, switch to sim. If you gave back a quarter or a half or whatever it is that psychologically might throw you off, you just, after that point, you just stop trading because you had a good morning and you don't want to punish yourself for good decisions. But we'll see. I mean, you know, the other way to look at this is if I do get a trade working here and I've got such a nice cushion, I could technically hold this long for quite some time and really not risk much. Right? That's the other way to look at this. If it actually works, like, I could hold it into the end of the day. And I honestly will probably go buy calls if this works. Oh, look at that. So that's a good sign. The one thing I could do is I can actually add to my trade. That is a choice. On a pullback, I could have added to it. when it pulls back like this, you can add in there. But then you leave your stop in the same spot. So came back to my entry, printed a star up, which is definitely bullish, especially after this speed bar down. These guys are at risk of being trapped if we can just trade one more bar up. Immediately, they will get trapped. Notice they've got this neutral zone down here, but then they've got lots of bearish delta and then lots of bearish delta in this low volume node. But there's this neutral zone in between, and that's acting as support. So all that is good. But there's nothing to do here other than maybe add. That I have is, should I add or should I not add? There's no moving your stop. There's no doing anything else. And then, of course, for taking profits, I will take, as always, a small piece at 10 points or maybe 15 points just to pay for some of the risk. And then the rest I'm just going to leave as a runner. And it might not work, right? It could give me 10 points and then roll over the rest. But if I think that there's a chance that it could retrace significantly from here, I'm going to take it. So if it does start to work, you'll hear order canceled. But if you listen closely, there'll be like a little ball sound too, and that's the actual order getting filled. Because what happens is I've got a bracket order, so when they fill an order, it cancels the stop, and when they fill a stop, it cancels the limit order. It automatically cancels one, and when the other one fills, so you'll hear a little diddle, and then order canceled, because they're both happening at the same time. But I've apparently had people try to follow me into trades and they hear order canceled and they quickly cancel they flatten because they think I that I saw something that made me want to get out of the trade. And that's not what it is. It's just, it just hit my limit order. And, so what's getting canceled is the associated stop. The stop on the remainder stays, but the stop on the part of the order that just got filled, well, that part is canceled because it's no longer in the market. It got filled. It got taken out. They might stop me. It's a little iceberg there. Okay, well, that works. So the ding just means that it reminds me that we're pretty far from the channel on the trade and perform initial algo. It's telling me that this ES here probably is trading significantly far from the blue line. Either that, or it could be that there's absorption on the 80 tick. Now, I don't see that, so it should just be that one time frame saying that if you want to fight this trend, this is the time to do it. And that ding was right on schedule. Okay, so I'm looking to take profits at
Order canceled.
Okay, so out of 1/3, I'm gonna break this up a little bit differently. So I'm out of 1/3, and I'm gonna leave the rest for now, and we'll see how it goes. I'm not gonna move my stop. We're just gonna see how this develops. I don't have any reason to think this is the low or anything like that. It's just that I'm up on the day and I don't want to miss. I missed a good part of this on the way up this morning, and so I'm dedicated to trying to catch this leg with at least a little size. So like I said, it's kind of an unusual place to be developing a low since there is a poor low below us. it's it, it's kind of a weird spot for them to bounce it. It makes a lot of sense to try and fail and then go take out that low and then bounce it. But like I said, if the algo says that there's a chance this is the low, and it does, they are trying to trap this star, but they need a white candle to close, not a pink one. They need a real bullish candle to close up here, and if that happens, it could be the low. Now, fortunately or not, I took this this trade with half size just because I did have a pretty good day, and I didn't want to give away a lot of it if it didn't work. So, and that was just because I did not want to give away, like I said, so much of my day if I was wrong. And so that's one of the reasons I only took a third off, is that it's, you know, it's such a tiny position compared to what I usually trade that I wasn't really feeling any anxiety about leaving the trade on. Now they might just come back and stop me out right here, and with 2/3 that would be a net loss, so that would suck. But that is the risk we take by not taking our whole profit at 10 to 15 points. It looks like they're going to stop me, but they haven't yet. They keep running into that. They've got to stop me here, right? They can't keep holding that exact spot. That's so... It's just one guy, like, iceberging this. Man, I should be adding. See, that's where you add. Fingers are busy grinding up some cannabis, and I didn't add there. I probably could have for very cheap. Because if you put, like, another 4 on right here, right, your stop is, like, 4 points. And so you just leave your stop where it is, and if that guy stays, you can take like 4 points out at like 10 points from here, and now your entire risk is paid. So you just like campaign this level until he disappears. That is totally an iceberg. Okay, well, we had on ES we had the sign of absorption, that blue arrow earlier. So the dark blue arrow is a sign that they were absorbing this area. It does make sense. Now that makes me think if we do get underneath here, which we probably will, that the trap back in on this might be quite lucrative. So let's see. First of all, I'm still in the market with my 3 contracts, but I'm guessing they're going to stop me out. But if they do and they jump right back in, I might need to take it again with half size. I'm assuming they're going to stop me here, but I don't know. And I don't know if they'll give me a chance to get back in. They might just flush it. But you can see that like the reaction that buyers are getting is getting smaller and smaller, and that's why I'm saying I'm probably going to get stopped. But dude, you never know. You never know with these icebergs. Okay, so they did fill the stop. Took a small stop. Now they're trying to. So I got stopped on 3, and I got 10 points on 1. So net it's a very small price to pay for the chance to potentially get like a big bounce. And now the question is, this is the harder decision that I really had to figure out earlier, is what do I do now if they bounce back? And I'm pretty sure the answer is you need to take the trade again. But I'm not thrilled about that answer. And I'm a little bit irritated that I wanted it short here and I didn't take this. And what I said I really wanted was a retest into that area. And unfortunately, they just couldn't get it high enough for me to get comfortable with getting short any higher than that orange bar. But that is exactly what they did. They retested and then found sellers. So you have to, before you buy a setup here, you'd have to say, like, what are the chances that we actually break this? And if it's low, then maybe I don't want to be getting long, right? Maybe I should be looking for shorts above this. Like, even if they do bounce, do I think it's going to go anywhere? And especially with, look at that delta, right? Like, this one too. A lot of people making big decisions in this zone. Now, watch, see how they, once again, blue arrows went down. I didn't see this. This is another reason why that, look at that. That is perfect. They got out of it, came back, tested it, rejected. That's a short. So I could have gotten out of the trade had I been paying attention to ES. And actually reversed in that case. I would have just, the right thing to do would be to reverse there. So that was just a missed opportunity because I wasn't paying attention to all the charts at the same time. But that's clearly that's a sell. Old support becomes new resistance, gets high volume after the absorption, right through the iceberg. Well, the iceberg is on NQ, but still, you get the idea. So now this one is down here, and we could have the exact same thing. We got below it, so bouncing back up and rejecting off of that potentially could be a short. Otherwise, breaking over it and then coming back and bouncing could be a long. The good news is we're getting away from this purple pivot. This did retest the purple pivot. This was the short I said I wanted to take. And instead I took the long and I didn't reverse. And look, we couldn't get over this purple bar. See that? The purple background bar? The bar that has the purple background? We couldn't close above that. Now that's the voodoo rage level. The top purple background bar is the voodoo rage level. So now we need to close above the voodoo rage level to really have any chance of buyers getting it going. And we're going to be approaching that poor low very shortly. It's, in my opinion, it's just not a long. As much as I'd like to use my levels here and think that the low volume node might hold, there's too much pressure to get to the low. So if they do bounce, I should probably short it. And like I said, I really should have shorted this or this, because that was my initial plan. I said, since I missed this, I should short the retrace. I was thinking retrace up here, but it just didn't make it that high. It just goes to show, like, if you're biased one way or another, you can read into the signals and know, because it's correct that you have an opportunity for a long to work here. If it's going to be long, it's going to be long here. It just doesn't go very far because it runs into momentum. So having that sense of, do I even want to be getting long here before you start following the signals is really important. You do need to know a little bit about reading the market. And you don't have to use this chart to do that. You could use the TPO chart or the profile or your candlesticks, but one way or another, just knowing where you want to be doing business is really important, rather than just taking every single signal and waiting for the signals to align with your locations, which, like I said, they did here, but they also did here. This short aligned perfectly with the purple pivot. And like I said, we couldn't get above this, which is bearish. Definitely wishing I would have grabbed those Apple puts, though. They're attempting to take back this LVN. Now I will say this LVN has been on my chart for quite some time, and if it stops working as support resistance, I will take it off. It has been working though, so I'm not going to take it off till it stops getting respected. But the fact that we're setting up a low right below it suggests that it might no longer be all that useful. Interesting. So they put a star in way at the bottom. Oh fuck! Is that? Hold on. I was not paying attention to this. Where is all the volume? At the low. So if they can get volume up here and then pull back and give me another star or a green bar, I could technically try to buy it. I guess I just would much prefer that low gets taken out. It'd be so much cleaner. That one was at the low too, see? So they got above it, but they couldn't put any volume above it. Ripped it down. One way or another, you need to put volume above this, meaning like not a pink bar, like a white bar above it. A white or a green or yeah, like something bullish. That's not pink. Pink's not good enough. And the problem here is this lift off was with pink. So sellers started giving up, but then once the sellers were back in the market, buyers wanted nothing to do with it. See that? That looked bearish. Yeah. So now this is becoming a pivot. So they're filling in volume in the low volume node, and that's just what they do. That's how these low volume nodes get negotiated, is they pivot off of them and then eventually fill them in. And right now it appears that they're filling it in. So it's probably the hardest time to take a trade, because you potentially are going to see some order flow that is just, it's on multiple time frames, and the smallest time frame is just literally playing short above it, buy below it. So it can, if there's not a lot of higher time frame players in the market, those little time frame traders can set off the alerts, and you can end up getting stars, even though there's like that aggression looks big relative to what you've been having, but it's because there's just no higher time frame here. So the relative to what you're having is relative to when just shorter term traders are trading. It might be complex, but it's not that sophisticated. It's got to be things that are. It's alerting me to things that are visible and objective that I can find on a time and sales or an order book or a footprint chart or the profile. It's things like that it's alerting me to. When certain conditions are true, I'll get the signal. So yeah, as long as we're in this low volume node, after this star, pink bar star, I'm just gonna wait it out. What I want is I want them to trade below the low, but to be able to short it, I would need to get the short back up here. So the entry needs to be higher than this pivot. Oh, there's that green bar, but we haven't gotten any volume above the VPOC, so it's not active yet. And it's pink too. It's actually pink. It's green, but the outline's pink because it's a pink bar as well. See, we can't put any volume up here. Like, sellers are giving up, but nobody's following through to the upside. And that, yeah, just like this one, it had plenty of volume, but it couldn't go anywhere. This one has actually very low volume. So see how this one's white, but it didn't get above the pivot. Now let's see if they can get this one white. Nope, pink. So still at risk of rolling over. The short might set up. If they get a white bar, then it's not a short. But if they're pink and then it rolls over orange, it could be. Otherwise, it would be interesting if this green bar that's pink actually worked for the reversal. That would be surprising. Okay, here we go. This might get me good. Technically, a star or a orange bar here would be a valid short at 56.50. Just to pass back through that pivot and try to get to the low day is the idea. And I'd want to be taking pivots into that aggressive draw. If they print the white bar, I'm not bearish. So I have to wait to see what they do. But again, you can see that the easier trade was the one that I just flaked on, or this retrace. It gets more and more uncomfortable the less momentum you have to think that it's going to drop through the bottom. Especially the short side becomes harder and harder. And see, there, like, nobody wants to be the one who pushes it down. No one wants to get trapped. It's interesting that on the 32 tick, they got a volume anomaly there. Oh, they got the white bar, so I'm standing back. I'm not going to short. The white bar had a VPOC line outside of this pivot, so it's suggesting that buyers took this level. Which is, again, a little bit hard to believe, but we just do what the algo says. This is where I would think I'd want to get short, but it clearly says don't. But now that we've developed volume above, if we can get a dip and then get them to hold and produce a star or a green bar down there again, that could give us a long... I don't know if they'll set that up. That would be a... Yeah, to get another dip. See, unfortunately, this rip just wasn't big enough to make this green bar a high odds setup. It was still good, but it's better if you can get volume up above there first and then pull back. Because now that we've gotten volume up there, now everybody knows that there's people trying to support this level, but they might short it anyway. You can see on the way down, most of the volume is right here, and this dashed line, or the dotted or whatever, the blue, is the average developing VPOC over the last 2 hours. So once this shifts up, we should get a pullback, but they can just V this out of here if they want. Okay, are they testing above this. This is the other spot that everyone want to short. Nope. Yeah. Back to the purple pivot. Remember, we rejected it pretty clearly with a volume anomaly and an aggressive trader. Would not be surprised to see them try to defend this level. We actually had another one over here too. So they are clearly trying to fill in some volume down here. And so then you just have to ask, is that bullish because we were lower earlier, or is this actually bearish because now we've trapped all these guys? Depends what time frame you're looking at. Which probably means that it's balanced on a high enough time frame. So it would need to trade up here and then reverse. It got close. Oh, and then we did get over a set of purple background bars right there, and then this is the next set right there. So there, yeah, it to clearly be long, you really need above this, but this is the first hurdle. What you want them to do is pull back to set you up. And like they could come back to like 38.41 on ES, but look how they came up to this absorption spot and are rejecting. So sort of seems like balance is likely here. Except for the fact that there's only 30 minutes, 40 minutes left of the day. And I would think since the concern with overnight would be earnings, and considering what happened yesterday night, I wouldn't be surprised to see some people de-risk. But like I said, I try not to think that far ahead. Like, all that thinking works to explain stuff that already happened, but trying to, like, prognosticate that everybody's doing this and they're positioned like this, so therefore, at the end of the day, they're probably going to be doing this, so I should do the opposite. Like, nah, I don't. I just need to know, is this a short or not? Is this a long or not? And then if it is, or it's not, where am I risking from? That's enough for me. Definitely tempted to short this, but it definitely tempted. But they did trap this guy down here, clearly. They have all this volume at the lows. So, as much as I think that that low needs to get broken, and it would be really healthy to rip through that, I just don't know if they'll be able to do it. Do they get a star? They do. Let's see if they can. Maybe I can get a cheap entry if they pull back a bit. Oh, we're right in the Voodoo range level. Like, this is potentially short. I don't want to pay 15 points if I'm wrong. I'd rather pay like 6. So I may, if they can pull up and then roll over, I might take it. It is valid though. If you're bearish, this is the spot. I'm just being extra sensitive because I don't want to give back my day. It's the end of the day. I just don't trade very much at the end of the day. But if they set me up for a, 3-to-1 risk reward here, I'll take it. Right. The play is basically just to get back to this low day, and then you'd exit most of your trade right here. But I want them to try to push it up, and then I can get short at like 11,480 or something. That would be ideal. Sorry, the cat's loud. He's playful. But this was technically a short signal, so anything in that range is valid to short on this first retrace. Once it hits the target, then no, but if it can retrace right away, I mean, I'm hoping I can get a better price. I might not, though. See, a green bar here is bullish. If they turn this green, then that's the second green bar, and it could just zoom. Right, if this turns green, then we want to buy dips. Yep. So see, I do not want the short. I want to buy dips. So if they can get under this, and then produce another green bar or star, that's ideal. I'm not going to short into a green bar like that after this move. If this wasn't green, I'd be getting short. But seeing that green, they're probably going to go 8 or 10 points down and then bounce. Or just rip higher. Which is crazy, because they're going to leave this poor low. Hard to imagine, but... And plus going purple, then pink, or pink, then purple, sets up another choppy area. There's just nobody trading here. You can see how slow it's gotten and how the range has been contracted significantly. The risk of doing anything right now is high. What you want are these big 15 to 20 point moves, and when they start doing this back and forth, like you risk like it just not extending even though you were right on your direction. Oh, that's interesting. Green bar, orange bar. So that's an unusual pattern. Well, you see it when there's high momentum, but there's not any momentum. I'm thinking it might go higher. And if this is a star, I'll probably buy it. As much as I hate doing it, because I think that low needs to be taken out, if it's definitely a valid buy if they give a star up here. So, or the next bar would be fine too. But they really do need to turn it on though. Otherwise, it's just not going to go anywhere. Now the issue is going to become time. We only have 30 minutes left in the session, and then I have to be flat for 2 hours. And like I said, if they don't take this low out, they'll probably go get it at Globex anyway. Let's see if they can give me my star. I hate getting long into the voodoo range level though. That kind of blows. Yeah, it's weird to do like what you think is not gonna. Oh, there's no star there. I gotta wait. I almost hit buy. I thought that was a star. It's a diamond. I gotta wait. That's not good enough. So volume anomaly, but no aggression. I just don't have a clue what that might mean. It's not a pattern I know how to trade. I don't know what the likelihood is that continues higher. It might work. I don't have it in my trade book as a trade I can take. If we can go a little bit lower and then print a green bar, it'll be okay long, but it's just going to get so late. But I'm pretty sure what I want is for them to take that out, get underneath this VPOC, and then find a buyer and shift volume higher. Pretty sure that's what we want to see. When we close, I'll take probably just a couple minutes to grab some food and break my fast, and then I'll come back and I will review the day. I want to look over a couple things, and I want to compare it to yesterday, if I can remember. Oh fuck, is it just gonna go without me? Because the 2 days were quite a bit different, but I had a lot of similarities, but had some really striking differences with how they started and how they ended. So I think it might be interesting to people to see what hints there were that yesterday was going to end at the highs and today wasn't. At least I don't think it's going to. There's the volume shift up. See how that dash line just jumped up? Now, if they respond to that, how they respond to that will tell us whether or not these buyers are actually committed or if they're just messing around. But see how we've gotten that yellow line above the dash line, and then it got its way back, price tested it, and then it shifted up. Well, now the line itself, like the line in the sand, has shifted higher, and so I wouldn't be surprised to see bears take that as an opportunity to try to flush it. Is there any way that is a short? Not yet. This may just chop around, you guys. It's neither side is really has any conviction right now. We may just fill in volume down here, which probably means we do break the low, but I don't know how much further we go than that. What we really want now that it's gotten so choppy, we want to short from up here or buy from down here. That's really what we want now. Is we want range expansion, because even if the L goes right and we're going up with resistance sitting here, it could cause a problem. But like I said, I'm curious if this diamond by itself might be good enough to buy there, because everything about that was right had it been a star. But it wasn't a star. Hold on, my cat's making weird noises. I'll be right back. What's going on? There's coffee. I guess he's just hacking up something. Probably ate something off the floor that he shouldn't have. That's lovely. My hairless cat has a hairball. But yeah, see how once we got this pivot, they tried to sneak out of it, and then they created another sign of a pivot, purple bar, pink bar, and now it looks like we're going to come back and maybe retrace through this. So again, we just got what looked like a long signal but didn't quite trigger, and now we're getting what should be a sign of short aggression, but I don't have the setup to trade it. So I don't have the bearish bias in here. I didn't get up here, and we didn't go high enough to get me the risk reward and to identify what would happen when we break resistance. See, I want to know what happens when we get up here, and it just didn't happen yet. I won't know for sure that we're going lower until we test up there and it rolls. I mean, nothing's for sure, but I won't have confidence that we're ready to take out the low until they actually push up above this and fail. Instead, what I'm expecting now is them just to chop between these two pivots and basically do nothing other than steal stops. So until this behavior changes, this price action is just not tradable for me. Like I said, it was great until right here, and it just got stuck. So I don't care which direction it goes, I just need the ranges to expand a bit. But unfortunately, with only 20 minutes left, 25 minutes left, we may not get another trade. But at least I'm up on the day still. Even I hate ending the day seeing runners get taken out, but you can't avoid all the stops. Always like ending the day at the high water mark, but it's just a fantasy to think that can happen every time. Still a respectable day at over 260. We're at 268 left in profits. So yeah, I gave back, a little chunk, but and considering that I started the day down 2 stops, I'm happy with that. Because I was down a little more than 400 at the beginning of the day, and now I'm up 268. So is it perfect? No, far from perfect. But at least I didn't do everything wrong. And once again, the best period of the day was when I was dialed in, taking trades as they set up and not making any exceptions. The missed opportunities lately is what I'm noticing, is that I'm not always on the ball, ready to take a trade. I didn't see it, or I knew it was coming, but I didn't have my finger on the trigger. And then by the time I get there, it's already gone. So like, it's just the level of focus that's required to stay engaged and attentive. It's higher than we think. So having these arrows line up, I'm not sure if it applies in this scenario, but I have seen that work for an extension in the past. What I don't know is whether or not you need momentum for that to work. It's a new signal. I'm still kind of playing with how to use it. But yeah, when they line up like this, so you have this bar and this bar both have arrows. Like oftentimes I'm seeing that result in direction being to the downside. But now we get an arrow to the upside. And see how they snuck underneath this? So this is technically an apex trap. It's just not the one I wanted. But it traded under an apex and bounced back up with a star. So it's technically a valid trade, but the reason I'm not taking it is I want to test down here so I can get range expansion. Because right here, that's range expansion about four points. So 4 points range expansion puts us at like 84. Like that's not even 1-to-1 risk reward ratio. That's get 10 points and risk 15. So, but I will say I've noticed when we get lots of arrows going in both directions, it's a sign not to trade. It's a chop zone. So if it's yellow, blue, yellow, blue, yellow, yellow, that's like stay away. There probably is a way to trade it. I just don't know the pattern yet. Right? Usually there is an edge there sometimes. But if you get too many of the signals in both directions, like there's probably more work to be done to further optimize that. They're trying to reject out of this low volume node. Look, purple bar, higher up bar, purple bar, up bar. I'm amazed that we're not falling into the low volume node or into the low of day. It kind of makes me want to buy calls, like just to swing or something, because it's like, why aren't they selling this? Like, it doesn't look bullish on the bigger picture. I mean, it does if you go big enough, but like for the next day or two, it looks like we've kind of started a neutral, like, balance period to me. But the chance that we get another move up after a slight dip overnight kind of makes me want to grab like calls at the end of the day. It's just, if you, yeah, it might be too late for that. Like 2 days ago, that makes sense. Yesterday we were at the highs, and like part of me wants to get back to those highs again, so I wanna grab calls, but Apple earnings tomorrow. I mean, maybe that works. Maybe. I could like level myself and buy Apple calls since I thought that I wanted puts. I could totally level myself and buy the calls, like ratio. I really thought this low was going to get broken, like I said, and I know I'm not the only one. So a squeeze does kind of make sense. How much are they? Let's just see. What would I have to fork over? 180 for 145 calls? Oh, puts. I was like, no way. Okay, yeah, a lot. Wow, calls are fucking expensive. Fucking earnings. All right. We'll see if I can get. Ugh, I hate fucking earnings. Let's do this. Let's do what is. It's not a great idea. I don't recommend anybody follow me in with this, but I'm wondering maybe can I do SPY, and that way, I don't think it's gonna matter. Apple's gonna fuck everybody if they miss. Yeah, but look how they just rejected out of this low volume node. They're just refusing to let them take that low. It's weird. It's weird. Perhaps the right way to play this is to let them rip and then buy Apple puts at close. That might be the last chance to get them. But it does look momentarily slightly bullish, but they're probably going to get stuck up here because that low getting untested is dangerous. So those are absorbing. See that red? The SPY chart, the ES chart looks a lot more conducive to going higher. The NQ chart really does look stuck. Okay, so I can get 145 puts for 176. But that's if I want to have expiration on Friday, which fucking sucks. But let's see how low those go. And maybe just for funsies, I'll get a chance to buy them cheap. Let's see. But like I said, I was thinking they're going to try to go higher. I just don't know how much higher they're going to get. So here, let's get it all lined up. Will be my last chance. to get into this. So let's see what we can do. I mean, there's still 15 minutes left. They could squeeze it a bit, and it might give me a chance to get those puts. And then if Apple does miss, it'd be pretty brutal. And like I said, I normally would not do like 1 day till expiration, but okay, so let's get one at 175. Oh shit. Buy, not sell, you bastards. Okay. I want 175, please. What the hell? Fuck, wrong account. I had it. I fucking had it. Shit. I literally just missed it. I put it in the fucking wrong account. And I missed it by $2. Okay, we're gonna go. Okay, good, I got it. Alright, so filled on the puts. I don't know if it's a good idea, but I got Apple puts for Friday. It might be totally crazy, but if we end up taking out this low overnight, and then tomorrow, if everybody's nervous about earnings, I may be able to get out of them before ER. We'll see. I should have gotten them earlier today. I did not think far enough ahead on that, and should have gotten them earlier today. But at 145, I feel like I can kind of get away with giving it a shot. Maybe take like 2 more. I don't know. Oh, it's kind of too late now. I probably should have gotten a couple more of these. Okay, we'll get a few more if they come back up. Let me see if I can catch 2 more. We'll get 2 more if I can get it. That way I can, it'd be better. I'd rather have a handful of them because that way I can scale out comfortably. Here we go. Go, go, go. Push. Got it. Okay. 176 is my average for the 145 Apple puts. We'll see. Like I said, I do not usually do 2 day till expiration, 1 day till expiration. This is not my style when it comes to options trades. I am literally just seeing this as if they happen to take this low out tomorrow, that if anybody's going to sell, it's going to be Apple because it's going to be ahead of their earnings. And then if I'm lucky, I can get rid of 2/3 of it before earnings and then pay for my risk plus a little bit and then let the rest ride into the last day of expiration and then sell them like within the first 20 minutes of the day. So that's my plan. I don't know if it's going to work. It's not something that's technically like that I usually do, but it made sense. So I'm definitely done for the day. Like I said, it was my numbers looked better earlier, but you can see even by the end of the day, 69% win on 26 trades with a net P&L of 223. Now I did pay $44 in fees, so I mean, 268 looks a little bit more impressive, but this is the number that you actually take home, right? But what's important to me is that I'm keeping that 69% win rate. I mean, that's nice, but as long as it can be above 55 or so, I'm totally cool. It means I'm following my process most likely, and where I end the day doesn't really matter as long as I keep doing that. And because like I said, I started the day down 450 just because I took 2 stops. And then my high water mark was up 3 and change, I think. 350, something like that, 340. And then I gave back 1 stop on smaller size when we tried to take the long here, which was just it. I did get some of my risk off. It just wasn't ready yet, and you can see that it ends up failing anyway. So now the question is why not short this and short this? It's because I don't have a good way to know that this one is safe and this one's not. See, this one gets stopped out, right? This one gets stopped out, even if it goes. So when it starts getting choppy like this, the best thing to do is just to step away, just accept that the price action's not ideal, and you just come back to it another time. Because it will, like once London opens again, it'll probably expand again. So let's see if we can break that low. I'd love to break it in regular trading hours, but it'd be kind of fun if we didn't, because it means that it would likely break during Globex, and then people might have bought thinking that it's going to hold. So let's see what happens. I did buy the puts, and those are up $25 a piece. So that's pretty cool. Oh wait, no, $25 total. I see, because I only got. So did I only get 3? I thought I got 13. Where is the amount? Oh, I see. I gotta click this. That's right. I only got 3. Okay, well, that's all right. I thought I got a lot more than that. That's okay. At least I got more than 1. I must have just. I thought I bought 10, and I must have just bought 1. Because I know I was like, oh, I should buy 3 more. I thought my total would be okay. Well, that's all right. It really is a lotto then. So 3. Let's see, what's at risk? 3, 450, 6, $600 risk. So there's market on close. See how they're trying to hold this low? I'm telling you, that is bad news for bulls if they do that. Because if people buy into the end of the day thinking that this low is gonna hold, and then they roll it over like in Globex, whew, it's gonna be dirty. But you can see that this low volume node is trying to work as support resistance, but it's just not doing very much anymore. It's likely a sign that it's just finished. See how yesterday it was clearly a low volume node, and it was volume area high, so you'd think that would be an important spot. And today it was an area that we traded through 1, 2, 3 periods, like breaching right through it on the profile. So the anomaly has been repaired. See that how now it's like the angle is smooth. So most likely this level is no longer important. And then the in addition, the single prints were all repaired. So that's done. You can see we got a double distribution, and so the oh, I guess I could have put it here. I will leave that there for the review. I'll leave it there for the review. We'll do this in the review. Let's review with all that, so we can see what we had, because I'd like to evaluate whether or not it was useful during the session, and I really need to do that trade by trade. And so, like I said, I'll take a little break, grab some lunch, and then come back and do the review, I think. If people are interested. Yesterday I offered to do it and nobody wanted to do it, so if people want to see bar by bar what the optimal way to play it was, I will show you, and I can even show you where I didn't do things that I should have. I gotta say, my buddy Froggy um, identified that higher time frame distribution really well uh, yesterday, and you can see that. I was watching for it today, and you can definitely see it in if you watch equities like Apple has that classic like try to go a little higher and then reject, try to go a little higher and then reject, try to go a little higher and then reject. Um, yeah, and he saw that before it happened. So props where they are due. Um, yeah, he sniffed that out like a bloodhound. But seeing that this could resolve lower because it's distributing from this. See that? It's coming back into that, and just they're letting people sell higher because they decided when it got down here that they no longer wanted to be long, but they got long here. So as it comes back in, they distribute out in of here. And so you can, I showed you this earlier with another chart, but you can mark the wherever you say the consolidation starts, so where the consolidation ends before the breakdown, and you can identify a potential spot where if the market gets to it, you know that the volume area has been given back. So look, that's the volume area, right? And then you've got the point of control just a little bit under the voodoo range level. So then if you go over here to the current one, what you see is if you reject out of the low volume, the volume area low, it rejects out and distributes, right? But when you get into it, the likelihood is that you're going to travel right through it. Well, it did travel right through it, and it tested above the point of control, which was down here, but then rejected volume area high and fell through point of control. So now we've once again distributed out of here. So this should become resistance, and the result is potentially a head and shoulders or just a double top. So that's, like I said, once you get good at this stuff, you can see that before it even happens and identify that just having this approach reject is all it really takes to know that not only could this reject, but also even if they get through here, we could just be in some sort of a distribution pattern to try to let these buyers go. That's how the market works. Here they come for that low, right into the close. Look at that. Like I said, I think it's super dirty if they hold above that and then roll over it in Globex. It's, oh my god. So many like swing traders would put their stop right below day and then get gapped on tomorrow, you know? So let's see, is there any pattern in this chop with these arrows that could have helped me? I see this one, obviously, but we never really returned to the red level, which was way up here. So that level, if returned to, can become resistance. I guess I'm not going to mark it because we're going to do the review and I don't want to know about it for the review, but that's how that works. With these sideways arrows, generally it's if you can develop volume below this, it's bearish. They go purple, they bounce. Now it's here, so if you develop volume below that, it's bearish, which is here. They bounce, and then do they develop volume below it? Yes, right here, and then it's bearish. So what if you use the original one? No volume, not quite enough volume. Now you can short this. The blue one said that this was support for buyers, and there's a buyer interested in stacking their orders there. They reject out of there. They try to save it. You can see that once again, arrows pointing at arrows have the potential to create new support, but if it's against momentum, it won't hold the trend back. So this is, and the diamond there all the way through was the warning that buyers needed a ton of aggression, of volume to even lift it a little bit, and none of them really got any continuation beyond the resistance point. Okay, there's a that is absorption. Nice. So exactly what I hoped for. We got down towards the low. They absorbed buyers and let the market close, meaning that anybody in the equity options aren't going to be able to do, which is like what drives markets these days. They're not going to be able to adjust their positions until we open again. And we did not on NQ or AS break that low, which was below the Globex low, right? That we went to the Globex low and bounced. And so now this regular trading hours low is everybody puts their stop below this and YOLOs hoping that we open back up here. Well, when we dip underneath it, when earnings are bad, what's going to happen is all those guys get trapped and they won't be able to get out of their position until tomorrow. So even if we get short positioning overnight, any rip tomorrow can likely be sold, which is why I bought those puts. Now, like I said, it might not work out that way. And if good earnings come out overnight, it's possible that you could just hold this, right? It could bounce down or it could rip down and then bounce. It could just never test it. Even though it's a poor low, it doesn't have to test. But if you look at, like I got them in Apple, and if you look at post-market, they had what would look like a bullish close on a very small time frame. Post-market immediately dropped, at least at first. I don't know if it'll stay down there. But like I said, I'm taking advantage of the pattern on NQ and trying to get the results, the extra volatility that I would expect in the Apple on the Apple chart because of earnings coming up. Ideally, the way that this setup works would be I would get out of the majority, 2/3 of the Apple puts before earnings, like tomorrow, not Friday. And then that 1/3 left over, I can hold over earnings, and worst case scenario, that one goes to zero and the other two have already paid me. So like for instance, if I get, let's say I get 50% on the first two, and then the second one, and then the third one goes bye-bye, right? I'm still break even plus I'm net positive on the trade because two of them made 50%, so it would be, and then one of them went to zero, so it would be net positive. Yet I have a chance that if earnings totally tanks and Friday we open way lower, those puts will be worth, that last one will be worth more than what I made on the first two. So the opportunity is there for a big move. We just have to see what happens. But like I said, that's all because I knew that this low was a poor low. And see how close all of these are? See, so these are poor lows. We need excess below that before you really should be getting into big swing trades to the upside. So I'm going to take advantage of the fact that people don't know how to read profile and they buy the close and put their stop down here where it doesn't belong. Like I said, is it going to work every time? No, but sometimes it will. All right. I'm going to take a quick break and come back and do the review, but I appreciate anybody who enjoyed this video. I try to do these at least once a week. If you want to come back for the review, I'll be starting it within maybe 15 minutes or so. I'm going to go back to the beginning of the day, look at what we had on the charts back then, and try to go rotation by rotation, seeing if the algo triggered us in or not, and then determine why I was in the trade or why I wasn't. I'll also be looking at the spots I'll be aligning my fills to see if I took any trades that weren't triggered by the algo. And then what I'm always doing in all these reviews is looking for new signals that are working that I might not be aware of, or combinations of signals that might be working that I'm not aware of, and that's how. And then also looking at the ones I am aware of to see if any of them are no longer working at the time. So that will be coming up within the next half an hour. I'd say I'm just gonna grab a drink and rest my voice for a little bit. I'll come back. I would just do it right away, but that way, in the catalog, since I saved these on YouTube, the live trading session will actually be live trading, and someone who just wants to see the review can click on the review. So if you just subscribe to my channel, you'll get the alert when I go live. Otherwise, you can always follow me at RedBenTrader on Twitter. So I appreciate you guys, and we'll see you all soon. Oh, there we go higher. Looks like earnings were good. But like I said, that's okay. I'm not worried about it. It was a small position with the puts, and there's no guarantee that this will actually hold the lows. But if it does, that's okay. We take that risk knowing that I wouldn't. Then I'm just glad that I only got 3 of them and not 13 like I intended to. But yeah, you don't know if these are going to hold. There's nothing I can do at this point, so you just kind of let it go.